a child's Social Security benefits on the parent's return as income.
Yeah.
She was wanting to put it on there, and the
Oh,
client
no,
was
no,
sitting there
no.
telling her, no, that doesn't go on my return. That's my child's income.
Yeah.
And she held it up and pointed to the address on there and said, see this? It says it is you for your child. That makes it your income.
No.
And she sat there and argued with her, argued with her, argued with her, argued with her. The lady finally took her stuff, got up, and left.
I would have too.
And then I came in, was sitting there talking with Michelle, and Marisa had come in, and Michelle was filling us in on what had happened, because Sandy had already left.
Right.
So Michelle was filling me and Marisa in on what had happened, and we're like, what? So we called the lady, and she came back in, and we finished her return correctly. But yeah, Marisa turned around and told Sandy that, yeah, we don't need that anymore.
For that instance, but her husband.
Yeah, well, that's a separate issue.
Yeah, that was funny.
That is a separate issue.
Did he ever make it back to Kansas?
As far as I know, he's still in Arizona.
Living in the bus depot or whatever?
I have
You guys
no
still
idea.
there?
No idea.
Oh, thank you, thank you. You disappear when you go back and forth sometimes through that crap. But today it's not so
Well,
bad.
it helps because the
It's
sun is
not, yeah, it's not so
sun
bright.
is being blocked by some clouds at the moment, so that does help a little bit.
Well, the fact that it's only going to be 68 degrees today.
Yay.
That's why we're having leftover pancakes tonight.
That's why I go home and probably open up the house.
Yeah.
I'd like to, but I don't want that.
Open it up, air it out.
I did it yesterday, but
It is fun,
you know.
That back
Take
there,
advantage
no,
whenever
and
you
I called
possibly
again,
can.
and
I
I know.
know, right in front of us.
It's like, what the heck?
I need to turn AC off.
I haven't had mine on since summer. I have a big old unit. Because I always sit in my front room, and then at night I open the bedroom door and just close straight in there. I'm only cool in one room, 2 rooms. I'll need AC in the bathroom to be safe.
All right. So today we're going to start discussions on tax credits. And we're going to start off with the worst of them all. Okay. The most powerful of them, the one that's most likely to be abused and for fraud.
One everybody wants,
It doesn't always get.
but doesn't always get. Yeah.
Earned income credit. And that is the chapter. That's what we're going to discuss today. I'm not going to spend a lot of time on the due diligence section because there's an entire chapter for it. And I don't want to scare the bejesus out of you right now.
And you get on here and train on that.
Yeah.
If you don't do it right, the IRS is coming for you.
Which is a true statement, but we don't let you get into a position where that's an issue. We want to distinguish between non-refundable and refundable credits. Today's credit is fully refundable. We want to know how to figure and report the earned income credit. It has its own table.
You said the amounts didn't change this year?
I can't find anything on OMA that said anything about earned income
Increase,
credit.
decrease.
Yeah.
Well, we lost a client at our office due to all this.
What?
He called me, because he's a family member, and asked about claiming 9 or 10 on his W-4, and I said, that's illegal, dude, you can't tell me you're doing this.
Why would you want to do that?
Because he thinks he needs more money during the week, that the last 2 months out of this year, he's gonna get so much back more than paying in to the government. I said, dude, who told you that?
That's not the
HR told him to do that at his company he works for. I said, she's not allowed to tell you nothing that's illegal because she's not a tax attorney, and you're stupid for listening to her, go ahead, but you will not be doing a return in my office.
You work at next
So
Okay.
this year,
Yeah.
no qualifying children, EIC is $649.
So that's what I.
For one qualifying child, it is $4,328. For two qualifying children, it is $7,152. And for three qualifying children, it is $8,046.
So it did go up.
So, for no qualifying children, single, head of household, married filing separate, max income is $19,104. Married filing joint is $26,214. That is for no qualifying children. With one qualifying child, your income threshold for single, head of household, and married filing separate is $50,434. Married filing joint is $57,554. For two, it is $57,310 and $64,430. And for three, it is $61,555 and $68,675.
So now that he said that all out of context, I'm going to make him repeat it again when we actually get to that part.
Read it off, Matt.
That way you can correct your paperwork. All right, so this is a tax credit. Unlike tax deductions, where it reduces the amount of income that's subject to tax, tax credit is a dollar-for-dollar payment of your tax. Tax credits can be non-refundable, refundable, or 60-40. Tax credit can substantially reduce the amount of tax owed, or make your refund bigger. Well, that's the idea. However, not all tax credits are alike. This is way true. Some are more powerful than others. Some are not even worth the paper they're printed on.
Like the EV credit that everybody's going ape shit about.
Oh, if you don't have it now, you're too late.
Yep, it ended in July.
If you had it a
No,
year and a half
September.
ago,
What's EV?
the electric vehicle credit, if you had it a year and a half ago, you probably could not have taken it just because of the way it was written. Could you find an EV passenger vehicle brand new for less than $60,000
That was
or
made in the United-
$55,000?
That was assembled in the United States.
That was assembled in the United States. If you did, you couldn't find it for less than 55, which means you didn't qualify for the credit. If it was a Cybertruck and it was assembled in the United States, it had to be less than $80,000, and you can't find it for that. If you decided that you wanted it so bad you were willing to get a used vehicle, it couldn't be any more than 2 years old. And for the car, it had to be less than $25,000. I can't find a 2-year-old Tesla or 2-year-old Ford EV or anything else for under about 32. So there again, you don't qualify for it.
And we'll talk about all this again when we get to that tax credit in a couple of days.
I don't even know why we'd go over that tax credit because it's not going to be an issue for 2025.
Well, no, because if you didn't buy the car before the end of September, you don't qualify.
Right.
So why even have it?
And if you did
That's
buy,
the idea. They got rid of it.
right, and if you did buy one before the end of September, the chances are you don't qualify for it because you paid more than your threshold amounts.
But it was hilarious to me to listen to all the Ford commercials
Yeah.
going up to it because they were really trying to sell that EV Mustang.
Yeah, the Ford commercials, the Chevy commercials, Tesla, oh yeah, come on in, you get a $7,500 car. It's just like the old couples that we deal with that come in with these 30,
Don't go starting on that.
Let's
So pissed off.
the
we'll come
solar
back to that.
credits.
Yes, that's what I'm talking about.
Yeah.
A non-refundable credit is a dollar-for-dollar reduction in your tax that can bring your liability down to zero. It's non-refundable. That's the best possible result. Just pay all your taxes. Whatever's left over, you don't get. But at least your taxes are paid. Refundable credit is different. It's in the payment section, in the same place where you'd find your withholdings. IRS treats it as cash. And if I don't owe any tax, if all my refundable credit, non-refundable credits paid my tax, whatever's in this section, I'm getting back all of it. Which is what happens a lot of the time, especially for our people that are collecting earned income credit. Their non-refundable child tax credits probably took care of all their load. You do not have to have a tax liability. You do not have to have any taxes withheld to qualify for a refund.
Nope.
I have a couple of clients who know what they're doing. Don't have any taxes withheld from their paycheck because they know that they're not going to owe any taxes by the time they get done using their tax credits. Smart on them.
Then you get the stupid ones that hold out
Yeah.
more than they should have, and
Or
they
you
get
get the
stuck going.
Or you get the stupid ones who don't withhold enough because some guy told them.
Or their companies aren't withholding.
Or they're not filling out their W-4s properly.
Right.
That's
That's
That-
the biggest one.
that's our biggest one is people that, especially couples,
Yeah.
that are not filling out their W-4s properly because they pumped it out in 2018 and nobody told anybody how to do these things. Here's a document. Fill it out.
Here's the new W-4.
Fill it out.
Everybody had to fill it out. And the idea of the new W-4 was to put more money in your pocket throughout the year, which is a good idea.
Yeah.
But a lot of people filled out the W-4 based on what they knew from the old W-4, and then that really screwed them over.
Yeah.
So everything that we're going to be talking about for the next few weeks are coming from Schedule 3. There's a lot of credits that are on there. We're not going to talk about all of them. We'll talk about a good portion of them.
Most commonly used.
Yeah, the common ones. And then Schedule 3 feeds this section of your 1040. Earned income credit is its own line down there, highlighted line 27. Earned income credit is also called the Earned Income Tax Credit, EITC. We just say EIC, it's just easier, faster. But whenever you hear the IRS talk about it, they use EITC. This is credit for certain people who are working and have earned income under, well, for 2024, $66,819. Earned income credit is what you call a bell curve. Goes up, gets to a maximum, goes back down. So at both ends is zero. If I have no earned income, I don't have any earned income credit. There's also a point where I have so much earned income, I don't qualify for any income credit. And then everywhere along this line between this point and that point, you fall and get a refund or get some tax credit. But you can see that there's a huge difference sometimes between just a few $100s about being here or here or here. There's a sweet spot.
And a lot of our clients have figured out the sweet spot.
They know they can work up until that point, then they quit just to get that magic number.
And it doesn't necessarily come back and bite them because what's the maximum you said?
Oh, the
8,000 something for 3 kids.
the maximum earnings for married filing joint is $68,675.
Yeah, 675.
But you figure the sweet spot on that curve, even for 3 kids at $68,675, the sweet spot on there is going to be right around $28,000 to $30,000, about half of what your income threshold is. And our clients kind of know that spot. So it's not uncommon that we'll have a husband and wife come in doing married filing joint because the husband makes $30,000, $32,000 a year. Mom doesn't work. There's no reason why she can't. She just doesn't, because they know when they come in, they're going to qualify for the maximum amount of the earned income credit. They've got 3 kids, so they've got an automatic non-refundable tax credit, which funnels into a refundable tax credit. And by the time everything is said and done, at $30,000, they're not going to have any taxable income. So almost all of what Dad had taken out of his paycheck is coming back. And that's where you sit there and you start seeing $10,000, $12,000, $15,000 refunds coming back. Because
Then my highest is like 24,000.
Yeah.
yeah,
I mean-
that was back during 2021 when they skyrocketed everything.
Yeah, but I mean, it's not impossible to say that under the right circumstances, your tax refund could double your earnings for the year.
Yeah.
And that's why they'll come in here. I only work for 6 months. I got to pay $12,000 for the entire year, and they're going to walk out of here with another $12,000. So in effect, they made $24,000 last year.
Only 12 of it's taxable income.
Yeah.
If they
And none of
if
it
they
was
beat their
actually
standard
taxable
deduction.
Yeah, because the standard deduction was bigger than all of those.
Yeah.
Some people just had figured that out.
They figured out how to game the system.
Or they know when to add a new child.
Yeah, that's another. It's like, okay, well, I need a new kid.
One out, one in.
And that doesn't necessarily mean that mom has to get pregnant.
Don't go there. Whether or not you qualify for it depends on your income, your filing status, and the number of qualifying children. I don't have to have any to qualify. Most I can use is 3. I don't remember which 3, but that's the most. 3 or more, you can have 5. Doesn't matter. It doesn't help you on this credit. It'll help you on child tax credit, but it won't help you on this credit.
Right. And for repetition's sake, we always go with the 3 youngest children.
Yes, that way, yeah.
Consistency.
Consistency. The 3 youngest children will always be on the tax return. Because earned income credit's refundable, you can receive a refund even having no tax liability and had no income taxes withheld. Like I said, I have a couple of clients that actually do this. They've got it figured out. Well, I don't have to pay taxes withheld. I'm only going to work up to $15,000. I'm not going to owe any tax. Why have any withheld? Publication 596 provides 15 rules that must be met to claim earned income credit. Some rules apply to everybody, other rules apply to select people. Well, so let's talk about the rules. See, this is where Matt really dropped the ball.
Yeah.
So for 2024, your adjusted gross income must have been less than $59,899 or $66,819 for marriage filing jointly. If you had 3 or more qualifying children, that's still a lot of money.
That was last year's.
But keeping in mind that as you got closer to those caps, so at $66,819, yeah, if I'm at $66,815, I qualify for earned income credit. What's the amount of my credit?
$3.
Yeah, $3. Woo! It's a bell curve. I mean, there's a point where you're getting close to 0.
66,819 is 0.
It would cost more to actually process the form than it would give you credit. You might as well not do it.
Right.
If you have 2 qualifying children, the top for 2024 was $55,768 or $62,688. you had one kid, 49084 or 5644, 004. He only has a licensed domain.
It didn't go up very much from last year, about $600, less than $600.
Now, if you don't have a kid, yeah, it's harder to qualify because what, 18,591 or 25,511.
Yeah. I mean, if you think about it, as a single person, no kids, no nothing, how well are you really living if you're only making $1,500 a month? Gross. That's not what you're bringing home. That's gross before they take taxes out. So, I mean,
I do just fine, thank you.
but half of your income's not taxable. That's a completely different issue.
So, for an example, we have Clark up here. He's got 2 qualifying children. He had 48,500. His adjusted gross income is 56,864. For earned income credit purposes, he's at 48,500. His taxable wages, however, since his AGI is not less than 55,768, he makes too much money. Because yes, this is an earned income credit. The credit is based on the amount of your earned income, but there's another rule that says that if you include, you have to include all your income to see if you disqualify.
And it even has another rule on top of that.
Yeah. So there's rules upon rules. This is why it's the worst credit, because it's the most complicated credit.
Mm-hmm. Because even at the end of the day, after all of your income is figured up, if you're not under on your earned income credit, you're not under on your total income credit, now we have to see how much unearned income you have and if you're over on that limit.
Right. You don't qualify.
So if you only had $12,000, but you had $15,000 in stock tradings, unearned income, that $27,000 you're still under for 2 kids, but you made $15,000 of unearned income. You can't have more than 10. So you just shot yourself in the foot, and even though you only have $27,000 of total income, you don't get credit. That's the hardest thing to explain to people sometimes. Because they'll go, well, what's the threshold? Well, this is the threshold. Well, I'm $15,000 under the threshold. Why don't I get it? Well,
You had too much other income.
you're only allowed $10,000 of unearned income, and you had 15. Killed you.
And what disqualifies? Matt brought up stock, which, okay, that's a possibility. What's more likely scenario is that your rental income.
Yep.
That's unearned. Guy has 5 different houses that he's renting out, and he's making a little bundle on it, but none of that is earned income. But it can't be used against him.
Or a pension.
Pensions, yeah.
Grandparents that are, for whatever reason, are raising their grandchildren. They're on Social Security. They get a pension.
Well, that's not earned income either.
Grandpa works a little bit.
Yeah.
Grandpa's a greeter at Walmart. So he's got earned income, so they could qualify for the earned income credit. But if they make more than X dollars on the pension, it knocks them out.
Now the pension in
Matt likes to talk about 5 pages ahead of where we're at.
yeah, but the unearned income is different rate than the.
It won't help you
earned.
qualify for any of it, but it'll certainly help you disqualify for it in a
Yes.
big hurry.
Oh,
All right, so rules for everyone. Rule number 2: everybody on the tax return must have a Social Security number. No I-10s, no A-10s. They must have a Social Security number.
New rule this year.
If somebody on the tax return doesn't have a Social Security number, you should wait until you get one. If you can't get it by April 15th, file an extension and wait.
Everybody's got a house. Social Security, right?
Everybody,
Yes.
yeah, qualify for EIC. Everybody's got to have Social Security number now.
The days of requiring only one spouse on a joint return to have a social security number are gone. They
Yeah.
want both on a joint return. They want both people, spouse and taxpayer, to have valid social security numbers.
Yeah, so my client who last year qualified, but then her husband got deported and that shut down their entire trucking company because he was the driver. She qualified for EIC last year even though he had an I-10.
She won't this year.
Well,
Well, she will if she does.
she's going to because here's what I'm going to do, and I know this is going to be true. He's still in Mexico. She's up here. Let's see here. Head of household considered unmarried. That wasn't very hard.
Yeah, because they've been
There's no
separated
way
over
he was
6
up
months.
here.
Yeah, they've been separated for over 6 months.
Yeah, he's been down there since last year. So she's going to be head of household considered unmarried. I've just circumvented it. But
Unless she sneaks a new baby in on you or something, because he made it back.
no, she could go to Mexico.
Yeah.
Yeah, there's nothing that says she can't go down to Mexico, romp around, get pregnant, come back here, and have the baby.
She could go. No, it wouldn't help. They're already at 3. She could go to Mexico. That's not a problem.
The biggest difference that she's going to see on her return this year from last year is her standard deduction. Her standard deduction is going to be lower,
And I guarantee you that
and not by much.
Yeah, I'm going to pretty much guarantee you that she's not going to be in Mexico the last 6 months of the year because two of the 3 children are school age. So she's been here since. The motivation to go anyplace
Isn't there?
isn't there, and it's not exactly cheap either.
Yeah, well, she gets all the government benefits.
I don't know. She was really gripping.
School-wise, anyway.
Yeah, she was really gripping. So
Now, if she was legally married,
it was.
She is.
Was.
Okay.
Still
can you-
is.
How can you say unmarried when they were? when they are separated. more than
Considered
6
unmarried.
months?
Yes.
Yes.
Okay. Changes it.
Yeah,
Right.
they're considered unmarried. It's the same thing if you and your wife separated because you're getting ready to go through a divorce, and you have your apartment and she has the house with the kids. If you guys have been separated for over 6 months and you haven't been going back to the house and booty calls and whatnot, then she can actually claim head of household as opposed to having to file married filing joint or married filing single. Your only option is to either talk her into filing married filing joint, or you have to file married filing single because you don't have the kids. And yes, that is my favorite question. And yes, I ask it of every
I know, we
single
always
client.
giggle every time we hear it.
All
No
right, so
booty
you
call,
don't have
right?
a social security number. Most likely, in this case, is because you probably have a newborn child. Although they process that right away at the hospital nowadays. But if you didn't have one, fill out an SS5, file it with the Social Security Administration. Barring government shutdowns, they should get an answer back to you within a few weeks with your Social Security card. Can't use a child on either the original or amended return if you didn't have a Social Security number until after the due date. So, and dragged my feet, took forever, got paperwork snafu and a government shutdown. It never processed until November 15th. I can't. It's
Can't
too
put
late.
that child on the return,
It's too late. I can't put that child on any return.
and I can't amend the return.
Yeah, even if I didn't file it, or if I did file it and then want to go back and amend it, I can't do it. Social Security numbers that say not valid for employment and ITINs are not valid for EIC. If you and your spouse, if filing jointly, do not have valid Social Security numbers on or before the due date, well, you're done. If you're separated from your spouse and not filing jointly and qualify a child to live with you for more than half the year, you can still claim EIC if you lived apart from your spouse for the last 6 months, or you're illegally separated under a written separation agreement or decree of separate maintenance and you didn't live in the the same house as your spouse at the end of 2024, which is where my client's going to fall into.
Yep.
She'll still qualify for EIC. It's just that this time she's not going to be married. She's going to be head of household. Considered unmarried. You must be a citizen or resident alien all year. If your spouse was a non-resident alien for any part of the year, you cannot claim EIC unless you're actually married filing jointly, which that's what's changed. That rule no longer applies. Everybody's got to have a social security number. You can choose to file jointly only if the spouse is a U.S. citizen or resident alien. You choose to treat the non-resident spouse as a U.S. resident. No. If you make this choice, you and your spouse have tax on your worldwide income. Well, that's true. If you or your spouse were a non-resident alien for any portion of the year and your filing says not married filing jointly, well, then you're back to your problem again. You do not qualify for EIC if you file 2555 in regards to foreign earned income. Which, given the nature of this credit and how powerful it actually is, foreign earned income would be a problem because the IRS has no way of proving it. So technically, if it wasn't for that rule, technically I could just sit back and say, I didn't work all year. Just I made some income overseas. I did some remote work for a guy in Dubai, and then report it. I earned income. The IRS has no way of knowing. That's why this rule exists.
Because it's considered remote.
No, because it's considered foreign income.
Yeah.
If I'm in Dubai and I call you and I say, hey, I need you to set up my website for me, and you're here in Kansas and you can do the whole thing from here in Kansas, then I just turn around and I Zelle you $10,000 to your account. No way the IRS can track any of that. At that point, it's a personal person-to-person transfer.
It's
'Cause
my word saying that it's earned income.
Yeah, you would have to tell the IRS, no, this $10,000 that I got from Matt is earned income because he paid me to do this.
The guy in Dubai would actually have to 1099 me to make it work.
Yep. And then you'd have to file 2555, which would automatically negate your earned income credit.
Here's the rule that Matt had already talked about. Your investment income, he specifically went the stocks, bonds, and interest and dividends route, but this also goes toward the landlord route.
Yep.
All of that is considered investment income. Can't be more than 11.6. Regardless of any other condition, if your investment income, so your unearned income basically,
Mm-hmm.
is more than 11.6, you don't qualify. Well, that could really suck because your unemployment could actually be more than 11.6, and that's not earned income.
But it's not earned income, but it usually gets folded into your earned income for your total income, and that's where they get a lot of that at.
Mhm.
So, especially for stuff like unemployment, where you could have $10, $11, $12,000 of income there. They're not worried about this 11.6
No.
here. They're worried about putting it with everything else and
Because that's not
blowing you
investment income.
right and
It's just-
blowing you out of the water.
It's just unearned income.
Right.
There are additional sources of investment income subject to the 11.6 rule. If you're filing Schedule E, 4797 or 8814.
Schedule E is your rentals.
Right. 4797 is
4797. That's the capital gains, stocks and bonds,
Yep,
stuff
yep,
like
yep.
that.
So if you file any of those forms, you're done. You have income or loss from a passive activity. Meaning I'm getting paid for something. I'm being I'm a partner in something, but I have no say.
You get a K1.
This is a K1, and you know, I'm a silent partner. That's passive income.
Yep.
I have no input of what's going on whatsoever.
They just send me money or tell me this is how much I lost.
Rule number 7. You must have earned income. Well, there's a reason why it's called earned income credit. You got to have some.
That really should be like rule number 1.
It should be rule number 1. It's the most obvious rule. Credit's called the earned income credit because you must work. You must have earned income to claim it. If married, finally drunk, the rule is met if only one spouse.
You will get people that will argue, well, it's my retirement. I earned it. I'm just getting it back now. Yes, you earned it. But because that fact is irrelevant to the IRS. In the year you received that money, you didn't do anything to earn that money. The fact that you earned it 30 years ago is irrelevant to the IRS this year. And that's
I understand the nature of your argument, however, it's false.
right.
For most people, earned income is reported on a line 1 of your 1040, like W-2, wages and tips. But net earnings from self-employment income also count. And that's why you'll get the hairdressers in here,
Yep.
the daycare people.
Yep.
That's where we have to be careful.
And the really big landlords. Because you'll get clients that'll come in and they'll have 15 properties. Well, on a Schedule E, you can select a box that says this activity is being done as a business, which even on the Schedule E then makes all of that income earned. Don't necessarily have to file a Schedule C. Well, they should, but you don't necessarily have to file a Schedule C at that point. Because you've marked on the Schedule E that the person that's filing these is doing this as a business.
Where do you draw the line between hiring as a business or just
My line would be drawn, do you have an EIN?
Yep. Do you have an EIN? Are you running this just under your name, or do you actually have,
a company that does the
Right.
all the
yeah,
stuff?
Sergio's Property Management, LLC. If all of those properties are under Sergio Property Management, LLC, then even though we're doing Schedule E's for all of those properties, it's a business. If you just come in and say, hey, I've got 15 properties, here's this,
And
and you're working at Spirit, it's going to be harder to argue with the IRS that you're doing the rentals to make income. That might be exactly what you're doing, but at the end of the day, if your 15 properties gets you a net operating loss of $10,000, but you've made $80,000 at Spirit, are you really trying to do those properties as a business? You had one, your pilot dude that did the dog kennel thing, so he had a business loss to offset his income.
Right.
Lots of people do that. At that point, that's not necessarily a business. He's just trying to offset his regular income so he doesn't pay as much in taxes. Technically, completely legal.
So even if let's say if you pay a company to do all that stuff for you, and
It's
It's
passive
a
income.
write-off.
It's passive income at that point.
Passive income.
If you're not are not materially participating in the rental activities, you buy 15 properties and you say, Matt, manage my properties. Just send me a check. It's passive income for you because I'm doing all the work.
Yeah, and I'm not going to accept the argument, well, I chose the company, the management company.
It's irrelevant.
That's irrelevant. It's not enough.
It's not
The IRS does actually have a threshold.
right. They throw a bunch of stuff out that you materially participate. Well, if your material participation is going down to the bank once a quarter and depositing a check,
That ain't it.
that is not going to be enough.
Oh,
They want you going down checking your properties, getting stuff for maintenance, doing repairs, picking up rent checks. If I'm doing all of that under your direction, that's not enough material participation.
Lance's only income is from his Social Security benefits and investments. No matter the other circumstances of Lance's life, he does not qualify for earned income credit because he doesn't have any earned income.
Nope.
You can elect to have your non-taxable combat pay included as earned income for triggering the credit. Doing so may increase or decrease your EIC, and you can choose. If it makes it worse, choose not to. If it makes it better, go ahead and choose to.
I don't understand how they consider you being part of the military a job.
Because it's
If I'm
volunteer.
getting combat pay, it means somebody's shooting at me. So
You're working.
I know,
Yeah.
but I'm just what I'm saying, it just doesn't,
For the military, it's volunteer. Unless you were drafted, I mean, you have to actually go in and say, "Hey, I want to be a soldier, a sailor, an airman, whatever." You have to go in and volunteer for it. It's not required. It's not like Israel, where when you turn 18, you are required to do 2 years of service. In the United States, it's volunteer, so it's a job. It's something you volunteer to do. You know, McDonald's can't come down and say, "Well, you're sitting on the couch, you worthless lump of lard. We're bringing you to work." They can't do that. So it's volunteer whether or not you work.
and besides, again, non-taxable combat pay is it's hazard pay. It's not. I'm not getting combat pay when stationed at Fort Riley.
No.
state fund,
You ain't getting it.
You actually have you actually have to be stationed at an active, what the military considers an active combat operations area for you to get combat pay. If you just if you were here, you went through all of your training and everything else, you spent a year over here at McConnell, and they said, "You know what, we want to send you to Aviano, Italy for your next duty station." You go to Aviano, Italy,
Still
that's
no.
still not combat pay, even though you're in Italy. It's not an active. It's not an
It's
active
not
combat
dangerous.
zone.
It's not dangerous to be in Italy.
Now, if they turn around and they task you out to Bagram Air Force Base in Afghanistan, that's a little bit different. Then the pay you earn while you're there is classified as combat pay, and that goes in a little box on box 12.
Right.
now if you're a contractor, and then you go to a war zone and all stuff, you also will get the same thing.
No, you don't get non-taxable combat pay because you're not in the military.
Nope.
The contractor will get a 1099, and that's the end of it.
Also, you don't get hazardous pay. Or
That's something you negotiate with your
You may get the hazard pay, but it's not going to be non-taxable.
right.
It's only non-taxable if you are
Only
a
the
member of
military
the
can
armed
pull
service.
this part off.
Oh,
Yeah.
okay.
It's the perk for being in the military.
And you got to be in the right branch. I mean, Space Force, no, unless the aliens actually show up, then they can guess.
Yes.
No, if you're a civilian, if you're a civilian contractor,
If I'm in the Navy and aboard the Lexington,
if you're a member of a
probably
PMC, a private military
Yeah,
company
no, the
that goes over there to
maybe-
provide
Well,
security
you're a SEAL,
for
yeah.
dignitaries, whatnot,
yeah.
you're not getting
yeah.
combat pay. You're not getting non-taxable combat pay. You might get hazard duty pay through the company you're working for, but it's all going to be taxable. It's not going to be non-taxable. The non-taxable combat pay is exclusive only to 5 branches of the service. That's it. Well, actually 6 now. I
6
guess.
now. The Space Force.
Yeah.
All right, so you can choose your option that gives you the highest credit, but if you make the election to include combat pay, you have to include all of it, so all or none. That does not change the taxability of the combat pay. It's still not taxed, even though I'm choosing to for the purposes of this credit included in my income, my taxable income. Yes, please. W-2, box 12, from the Department of Defense, with the code Q is combat pay. Taxable long-term disability benefits received before reaching the minimum retirement age are going to be considered earned income. And if you get reported to you on a 1099-R, let's hope it has a code 3 in box 7. That enables it to be counted as earned income. Anything else on 1099-R is not earned income. But when it has the code 3, we can treat it as earned income. So Linda's in the military, single, provides home for her only child. Her only income from her W-2 shows $2,000 in box 1, $23,000 in box 12 with the code Q. So we have $23,000 in combat pay. The EIC election without the combat pay would be $689. With the election, EIC is now $3,845. Which do you think she should do? That's not very hard, is it? Oh, take the 649. All right, so the first 7 rules apply to everybody. This next set of rules, gotta have a kid. We attach a scheduled EIC to our 1040 to claim EIC with qualifying children. A qualified child must meet all of the following tests. You must be related to them in the way that we talked about in chapter whatever 2. Whether by birth or by blood, you must be related to them. Or marriage. Age. Less than 18 or less than 24 if going to qualified school. And younger than you. Heard those rules before. Residency. Got to be living at your place. Or at least listing that as their home address if they're away on temporary things like school. And the joint return test, which we already talked about. They file the tax. They're married, but they file the tax return only to get back withholdings. These are the same tests as for dependent qualifying child, except that EIC doesn't have a support test. They just have to meet all of these. They have to live with you, be younger than you, be younger than the age caps, be related to you. I don't care where most of your money came from. This is really, the whole idea behind the credit was to help the working poor. And so I don't care for earned income credit purposes whether or not most of your income, I mean, yeah, you work, but I don't care that you got free and reduced meals, state-sponsored medicine, paid for by the state daycare, all this other support that can come from state agencies or private agencies like the church. It's not relevant for the purposes of this credit.
Which is why I hate the button on our system that says, does it appear that the client has made enough money to qualify for the credits?
Because there's, in some cases, the answer is kind of no.
Yeah.
If I just look at my income, what I'm reporting, no, it doesn't look like it.
Especially if they come in with only $6,000 and 3 kids.
Yeah.
Now, we've had some that came in with less than that as income.
Yeah. No, I know.
But that's not, unfortunately, even though the box is there, it's not kind of valid for this. I mean, at one point, there was actually specific rules in this lecture. It says, you know, hey, they could be living at the homeless shelter as long as they're living together at the homeless shelter as a family unit. I just kind of need a letter from the director of the homeless shelter saying, yeah, I see that on a regular basis together.
Yeah. You used to be that we had to be sure that they were making more money than what they were getting in support.
That's changed.
So if they were on Section 8 housing, getting food stamps and Medicaid, however much they were getting, however much an insurance policy would be per month, however much food stamps they were getting, and however much of their rent was being covered through Section 8 had to be added all together, and they had to make more than that number to qualify for these. We used to get into arguments with our clients because they would sit there and say, how dare you say I'm not taking care of my kids? No, that's not what we're saying. It's nice they got rid of that.
Yeah.
Now
don't
it's
have
a
to
matter
worry.
of, are we doing it single or are we putting them as head of household?
Yeah.
That's what it's.
That's
getting
where
at.
the argument is actually happening. And I'm not
Yeah.
saying anything on that either. Well, you're not technically head of household. The state is, but that doesn't matter. I'm just going to file you as single and go on with my day.
It doesn't matter. You're still going to zero out on.
Yeah.
Yeah, if you have a lady that comes in and she's got $13,000 worth of income, that's $13,000 is all she's got on her W-2, and she's got 3 kids. Do you file her head of household or do you file her as single?
Well, I don't
Well,
have enough information.
I don't.
But,
I was
yeah.
going to say,
I mean-
what other assistance is she getting?
And well, at that point, it really doesn't matter for these credits. I can
Yeah.
file her single. I don't have to worry about proving that she paid over half of the upkeep of her home
She's single.
for the head of
Yeah,
household.
But you still
She's
get
single.
those ones that will argue with you. I'm head of household.
Yes, you are, but you don't need that credit because if I file you head of household now, I have to prove that you provided 51% of
Right,
all of the
right.
support for the upkeep of your home.
Right.
Yeah. But at $13,000 doesn't matter because the standard deduction for either filing status takes care of it. And so let's go with the lower one that causes less questions at the IRS.
How
Right.
many head of households do you have at one address?
One.
That's another one we come across.
One,
I
okay.
live upstairs, she lives downstairs.
Technically, you can only have one unless you can prove separate households. And they have to be able to prove separate households. So if if I'm living in, if I have a 3-bedroom or 3-floor house, basement and floor, second floor, and I live in the floor and second floor with my wife and my kids. Shannon needs a place to stay and with her 2 kids. So I rent Shannon out the basement. If Shannon can prove that Shannon has utilities in her name at that residence, and she's paying me rent, and I'm claiming her rent on my income, and I'm filing as head of household because my wife's not my wife, she's my wife, we're just together. So I'm filing head of household with my kids. She can still file head of household with her kids because she can prove 2 separate households. She's not coming upstairs and eating breakfast, lunch, and dinner with me. She's having breakfast, lunch, and dinner in the basement with her family. She's buying her own stuff. But you have to be able to prove that they are 2 separate households at the same address, which that's where we get a lot of our clients, is they can't do that because they've got one utility bill and everybody's just chipping money in on the utility bill. Doesn't work that way.
That's the problem.
Now, if you
Right.
have a house that is actually divided into separate apartments,
Because there's walls that.
because
Right.
there's walls that separate doors and mailbox, says 406 and 406 and a half,
Yeah.
Or
that's
406B.
approved.
Yeah.
Yeah.
Or 406.
But see, that would be a different address.
1, 2,
Right.
A, B.
Yeah.
That's a
upper,
different
lower,
address.
yeah.
406 and
Right.
406B are different addresses.
Right. So that same thing that I was just talking about, if I told Shannon, your address is 1111 and a half South Rock Road, mine's 1111 South Rock Road, now we can both file head of household, period, because she has her own address.
Right.
Yeah, when they look at it, they're going to go, well, those 2 are attached. And that's probably true. Whether she's living in my basement or whether she's living in the little 500 square foot mini house out back, mother-in-law house out
Yeah,
back.
like Linda does, correct.
Right. It's still a separate household, even though it looks like it's at the same residence.
Right.
But that's the catch: is you have to be able to prove separate households. And for most of our clients that have multiple families living in one home, they can't do it.
And part of the problem is if they all went to Liberty Tax, it'll flag.
Yes.
Fusion will say, "Hey, this address has been used as head of household on a previous return."
Now,
And if Liberty could figure it out, you'd be
Does it
darn sure that the
reject?
IRS has got the same program.
Does it reject for that?
No, it doesn't reject. It's a warning.
Oh,
It doesn't
okay.
stop you.
when you get everything in
You go to
and,
review
and,
return.
and you click
Yeah.
and you click it,
It's in the notes.
and it goes to you click submit, and it goes to that compliance stage. That's where you'll get the flag, and then you have to go to compliance. You'll see what it is. We have multiple head of household listings at this address. Please, this is what we need.
So we just change it with more documents?
Well, you have to we'd have to get a hold of the client at that point, and have the client come in and bring in sufficient documentation showing that they are a separate household at that same address. Head of household is the only one that is going to flag this. Okay, if me, Shannon, and Sergio were all living in the same household
As single people,
as single people,
not a
or
problem.
if me and Karen, Kelly and Shannon, Sergio and his wife were all living in the same household and we're all married filing joint, it's not going to flag.
Yeah, just head of household is the problem.
It's just
Yeah.
if all three of us tried to file head of household in the same household, is it going to flag?
And I don't think our system will take a half on an address either.
It doesn't.
don't-
It doesn't.
Yeah.
But you can get in A, B, C.
Right, yeah, because you put that on apartment number.
Right.
Right.
It won't take a half, which
Right.
is unfortunate.
Right. And in that
But
instance,
in that case, I would just say B.
Yeah.
in that instance, if it flagged and you didn't put the half in and it flagged to them, have your client come in with their address and just and upload those documents and send it to compliance with the statement stating system won't allow us to put in 1111 and a half, but this is her actual address.
All right, so now that we spent 20 minutes talking about nothing that had to do with what we're actually talking about, let's go back to rules for qualifying child on earned income credit.
It wouldn't be the morning class if we didn't.
I know. Relationship test. They must meet the relationship test. That means they must be your son, daughter, stepchild, eligible foster child, or descendant of any of them. Grandchildren count. Great-grandchildren count if you go that far, but I feel sorry for you at that point. Brother, sister, half-brother, half-sister, stepbrother, stepsister, or descendant of any of them. Your niece or your nephew. All these people are qualifying children. Julie's nephew Al, 14, has lived with Julie since Al's parents passed away 3 years ago. Al meets all the relationship tests.
Yep.
A grandchild is a descendant of your son, daughter, stepchild, or adopted child, includes great-grandchildren. The child does not have to be your dependent unless the child is married. A married child is a qualifying child that you can claim as a child as a dependent. If, for the reason you cannot claim this child as a dependent, is that you signed an 8332, that doesn't prevent you from qualifying for earned income credit. You signed over the dependency to somebody else. You can't transfer EIC. It stays with the resident, with the custodial parent. So it's not a problem. Even though the dependent section of my 1040 is actually blank at this point, I still qualify for EIC. An adopted child is always treated as yours, providing that it was a legal adoption.
Yeah, but for the 8332 on our end, we would actually put the child in the dependent and just mark that they're not being claimed as the dependent, so
This
that they
is
get
true.
put in.
On the program itself, you fill out the dependent section, and then check the box saying it's not being claimed as a dependent. But the side effect of that is just what I said. If you look at the dependent section of the 1040 that's going to print out, it's blank.
It's going to be blank. The dependent will be on the line above.
For EIC, the person is your foster child if the child was placed with you by an authorized placement agency, by judgment, decree, or other order of court of competent jurisdiction. course, from the first year I taught this class, the owner said, well, what's a court of incompetent jurisdiction? At the time, it was a joke. Nowadays, I'm not so sure. Authorized placement agencies include state and local government agencies, tax-exempt organizations licensed by the state. Catholic Charities, for example, would fall under this category. An Indian tribal government, or an organization authorized by the Indian tribal government. Age test. Your child must be under 19 at the end of the tax year and younger than you, or a full-time student under the age of 24 and younger than you. Or I could throw all of that out the window if they're totally and permanently disabled. Age doesn't matter. Hey, guess what? We saw those rules before.
Dependents.
Back on the dependents chapter. That's why I tell you not to stress over it, even though we go over them so fast. We'll see these rules again. Here you go. And I think we see these rules again.
Yeah, you feel like it's been beaten in your head.
We haven't covered child tax credits, education credits.
Yeah.
We'll see them again.
We'll see these rules again. The permanently and totally disabled is true if the child cannot engage in any substantial gainful activity because of a physical or mental condition, and the doctor has determined that the condition has lasted or can be expected to last continuously for at least a year, or is terminal. I love that. We're saying it's permanent, but it's only got to last a year. Well, then it's not permanent, is it? Oh, well.
Well, he's permanently disabled because he's not going to get better within the year
Yeah.
and could eventually lead to death. Even if death's 40 years down the road, it still could lead to death. And his condition's not going to go away in less than a year. That's kind of the way
Yeah.
I look at that one.
It's a possibility. Which brings up something that I figured out in last night's lecture about Schedule A that I wanted to bring up here. Medical deductions on Schedule A. If your client got dinged on ACA for having too much income and had to pay back,
As a tax?
you get to write it off as a medical expense.
It's on the paper.
No. That was in the taxes section.
Yeah, that's what I mean.
Yeah.
It was on the slide.
Yeah. I can write it off next year.
Okay, so I'll just give you a prime example. My car dealer has ACA insurance.
Yeah.
He had to pay back $4,920 of subsidy that he got because he made too much money.
You can write it off next
It's
year.
Even though that was lumped in as part of his federal income tax.
Yes.
Mm-hmm.
He's going to pay the tax this year, and the next year he's going to
can
write
write it
off
off.
the $4,000.
Well, he'll be happy to hear. Now, is that gonna go on there as a business expense, or does that have to go
No,
on
that's
as a personal?
Schedule A.
Schedule A.
Even though it paid through the LLC.
Well, then that's a different problem.
Yeah, that's a different.
Since he's doing it through the LLC, I'm going to say no.
I'm talking about somebody like Joe,
Right.
Linda's daughter.
Right.
If she overpays and has to pay it back, she can write it off on Schedule A, but you got to qualify to get that Schedule A.
It's you still have to be able to.
Yeah, you still have
itemize.
to be able to do that.
Okay.
But that was something because, we've had clients that got dinged for $10,000. And so that would have gone a long way.
Well, that's why I was asking, because my client got dinged for almost $5.
Well, in your case, since he's going through the LLC, he shot himself in the foot.
Right. I mean, because he claims it on SCHI.
Yeah. But if
Is
they're
there
doing it,
somebody out there?
Yeah, there was. He walked in between my car and the other car, but I don't know where he
Well,
went.
because my car window's down, but just my camping chairs are in there.
But I don't know if he's crossing the street or what's wrong.
Is it the little blue hatchback car that was next to yours?
No.
no, he got in the car.
Did you say
reverse lights are on. So So they're either stealing the car or that's
He
their car.
must not on the passenger side.
They can steal a little blue one.
So I wanted to bring that up. I was just covering the slide
Okay.
last night, and it's like, wait a minute, that says something that I've never seen before.
Wow. Okay.
So I wanted to make sure I brought that up to the class because like I said, I pointed it out last night because the sentence read differently to me, and then I reread it and realized that I'd been reading it wrong.
So was that active for tax year 2024 then?
Apparently, that's been active the entire time. It's just that we missed it. That's the problem with some of these taxes is that
We didn't catch the part.
I was asking if that rule was active for
Which
tax
rule?
year, the one where they could take, if they owed money back to, because they got too much subsidy, if that was active for tax year 2024. Because that would mean any clients that we had last year that had to pay back excess subsidy fees to the IRS would be able to claim it this year on their Schedule A.
to answer that question, remember since these slides are all built on 24 tax year,
I'm assuming that would mean
that would be true.
That would be true.
The only one I know is Rose.
It's something that you might need to look into. She might all of a sudden qualify for Schedule A.
Yeah, between that and her
Her
gambling,
family.
she might qualify.
So, like I said, that's the fun thing about taxes is that I've been doing this for almost 2 decades. Still learn stuff. If somebody comes up and says, "I know everything there is about taxes,"
They are a liar.
They're not just a liar. They're a damn liar.
Prove it. We would have to have the Schedule A, or the,
In order to figure that out, we would have to look. We would have, we would,
Yes.
we,
No, you need the
No.
1040.
we need the 1040. We'd have to look back on last year's filing and go to the premium tax credit, or go to Schedule 3 and see where see if the line that says excess premium tax credit,
That's what's deductible.
that's the number that's going to be deductible. I think it's like line 3 or something like that.
See what Rose is.
Yeah.
All the tax files.
Well, you can. We filed her tax return, right?
Yeah.
Yeah,
You can look it up right now.
Just open the federal.
That's what she-
Just open up the federal filing and scroll down to Schedule 3, where it says excess premium tax credit.
Todd, 19 at the end of the year, lived with his father and mother who supported him. Todd did not go to school. Not disabled. Todd does not meet the age test for EIC. Todd is not a qualifying child. Todd is a qualifying relative. Just to go back to those other chapters and tie this all together. Now, if Todd went to school next year, he qualifies. He graduated from high school this year. He decided to take a year off to find himself. Okay, well, that's this year. Next year's a whole other thing. That's why we don't like when people come in and say, well, last year, last year's last year. This is IRS world. We look at pictures, and every picture is a different year. What was true last year may not be true this year. And what was not true last year may be true this year. We have to start basically kind of over every year. Yes, I mean, that's a figurative speech, but,
Not really. 2022 was a hell of a frickin' year.
well, yeah, but,
When we had to explain to people why they weren't getting $30,000 refunds like they did last year.
yeah. Velma, at 25, cannot be gainfully employed because of severe physical disability. Doctors determined that her condition has lasted at least a year. Velma meets the age test because she's disabled. At this point, I probably also have the 1099 SSA from the Social Security Administration for disability.
Mm-hmm.
I'm not really worried about it. I have my proof.
And when we put it on the return, we'll mark it as she's
Dependent
getting it
disabled.
for disability.
And here's the other thing. Gainfully employed. Doesn't mean they can't work. Doesn't mean they can't go out and earn a little bit of money. They just can't go out and qualify for a job that'll pay all the bills. Residency test. Child must have lived with you in the United States for more than half the year. Cannot claim EIC if your child did not live with you for more than half the year, even if you paid most of the child's living expenses. Temporary absences are in play, though. Special circumstances include illness, school, business, vacation, military service, and even being put in jail. Junior's at the boys' ranch. That's really not a problem for me, apparently, for EIC purposes. Child who was born or died during the year is going to be considered as lived with you for the entire year. That's consistent. When we're talking about lived with you in the United States, that includes all states and districts and possessions and territories. The IRS may ask for documents to show how you lived with each child. And if you're claiming, we had that example with what's her name and Al. I might need to ask her, the IRS might ask her to provide enough documents to, because remember, it's a nephew. The IRS might ask for the documentation to get from here, point A to point B. So we'd have to have Rose's birth certificate showing the mom, and then the mom, her brother's birth certificate showing the same mom, and then the Owl's birth certificate showing her brother as the dad, so the IRS can ask for that.
How do you prove all that stuff?
You have to get all the birth certificates. Or as something in equivalent,
Security.
Social Security what? That's not going to help you.
Oh,
Just that, again, just because you have a Social Security card proves nothing. Except that they have a Social Security number. That's all that proved. Now, now in the case of Al and Rose, and I know it wasn't Rose, but I'm just going to use Rose because what they're talking about just brought it to my mind. In the case of Al and Rose, there is a document that might save them. Al is probably getting survivor benefits. And so I have an SSA 1099. So with that SSA 1099, that's going to say pay to for Al, that would be enough. The government has already proved the relation.
Right.
So that would be enough.
Right.
But at that point, then the IRS is probably not asking. Because they can query SSA and find out, well, he's getting survivor benefits.
And it'll go under,
Or she's getting survivor benefits for him.
It'll go under insurance.
And that would satisfy their question. But say that Al is not receiving it yet. And it's been 3 years, he is. But he's not receiving it yet because the paperwork hasn't gone through. The IRS could go through it and say, hey, prove it. And you're going to need to produce, 4 different birth certificates. Gets even worse if it happens to be like a step-nephew. Because now I have to come up with a marriage certificate somewhere along the line, too.
Oh, are we proving relationship?
Yeah, I was going back to that one real quick.
Oh my God.
So people can get mad because I ask them that question. Can you do this? Can you get this? And end it off. And I get the same look that you gave me. What?
Yeah.
Can you prove it? Because the IRS can technically ask for it.
Yeah, if they're not sure that your grandchild is your grandchild, they can ask you for the grandchild's birth certificate and then ask you for your daughter's birth certificate to make sure that you're listed on the daughter's birth certificate as the mother and that your daughter's listed on her son's birth certificate as the mother. Then that proves relationship. But Lord forbid if the birth certificate, if the child's living with dad because mom and dad split up, mom ended up going to jail for whatever reason, and dad's not listed on the birth certificate. He's the biological father, but he's not listed on the birth certificate.
Yeah. Joint return test cannot file a return. Your child cannot file a joint return with your spouse unless they're filing only to claim a refund of taxes withheld. And remember, I gave you that scenario of what a joint return would look like, and it generally has to deal with the military. I mean, it's the easiest way of putting your head around it.
Yeah.
They're still a qualifying child of mom and dad, and they're still living at mom and dad's place, even though they're married to this other person. But it didn't make any sense for them to set up a household yet because they immediately got shipped overseas. So it's late for them to come back, and then we'll start our life together. But right now, we're going to live at mom and dad's house. Only one person gets to treat the child as a qualifying child. Well, that's consistent. There's no halvesies. Even though some people think, well, you know, it's my kid and her kid, we should both be able to involve the credits. No. Somebody's got to win, somebody's got to lose. Doing so entitles that person to claim on the following tax benefits, including assuming eligibility, the child tax credit, the additional child tax credit for credit for other dependents, although that's the one the 8332 can sign over to somebody else.
Yes.
Head of household filing status, the credit for child and dependent care expenses, the exclusion of income for dependent care benefits, and today's topic, earned income credit. No other concerned person can take these benefits based on this qualifying child. You and the other person cannot divide these benefits between yourselves. The other person cannot take these benefits unless he or she has a different qualifying child. And I've seen that before. They had a brother and sister, and they got divorced. And he kept him, and she kept her for tax purposes. And they met all the other requirements.
Mm-hmm.
Well, it's not a problem. If you and another person are the same qualifying child, you and the other person can decide which one will treat the child as a qualifying child. You have grandma and daughter living in the same place, and we have the grandson available for claiming. We can run the return in different ways to find out what gets the most amount of money in everybody's pocket. And go that way, as long as they agree to it.
Yep.
If mom agrees that it would be better for grandma to claim the grandson, that's perfectly legitimate, providing that we've met all the other tests. And your biggest question at that point actually is just residency.
That's kind of a common one on your military issue, where you got a young couple, they've got a child, he gets shipped overseas immediately, she stays with mom and dad, living at the house. Mom and dad are taking care of her while her new serviceman is overseas. Who gets to claim the child? Well, she can, but since he's deployed in a combat area, most of his income is going to be non-taxable anyway. So who would benefit more from it? She can elect not to claim their child on a tax return and let her mom and dad claim the child as a dependent on the tax return. But it has to be, when they file, they can't put down that they have a child. They have to leave it off.
Yeah.
Grandma, her parents or his parents, whoever she's staying with, can then put that child on that tax return. And because they lived with her for over 6 months, it would be legal. The only time that there would be a problem is if mom came back or dad came back and said, no, we need to claim our child. Now there's a problem, and that gets into a whole new set of...
Well, that goes into the tiebreaker rules, and tiebreaker number 1 is...
Who are the parents?
Who's the biological parent? You win.
Yep.
Grandma loses if mother or father come back and say, nope, that kid's going on my return. Well, sorry, Grandma, you're out.
Yep.
You lose automatically. Most of that slide basically is what Matt said or what I said.
Yeah.
And we break into again, we've seen these rules before. If there's no biological parent, then we break down to highest adjusted gross income. In this case, highest adjusted gross income might be disqualification for EIC.
Yep.
Well, too bad. According to the tiebreaker rule, you win. So, was the fight really worth it? Good question. So, for an example, Wanda is 24. Her 4-year-old son lived with Wanda's mother for the entire year. Wanda made $14,000. Mom's income was $20,000 from her job. So they both have earned income. Gets a lot more complicated when we start throwing in Social Security and retirement. Wanda does not meet the age test, so she's not a qualifying child of her mother. Wanda's son is a qualifying child for both Wanda and her mother. He is Wanda's son and her mother's grandson, and he's under the age of 19 because he's 4. And they lived at Wanda's place. So we've met everything. We've got the relationship, we've got the age, we've got the residency. Got it all. However, only one of them can use the son for EIC. Wanda and her mother can choose which will treat the son as a qualifying child to claim EIC. If they cannot agree, Wanda wins. But in this scenario, we can run it either way. Find out which gets the most total refund and go that way.
I would probably side along the side of grandma.
Most likely
Because
at this point.
At those numbers, Wanda's income is under her standard deduction for single, so she doesn't have any taxable income. She's getting everything she had taken out back. Grandma, on the other hand, could benefit if the $20,000 is her AGI. Could benefit from the head of household filing status to eliminate that from taxable income.
And additionally, her earned income credit amount at $20,000 would be higher than Wanda's earned income credit
At 14
at
on the
14
bell.
because we're on the upslope of the bell curve still at this point.
Yep. Assuming that's all the income we're talking
Yeah,
about.
assuming that this is complete information. Big assumption. I mean, as a trained tax preparer, we all have more questions.
I mean, I could make the assumption that Wanda at age 24, mom might be late 40s, early 50s. That could make sense. So mom's maybe not getting any retirement, so we don't have to necessarily worry about that. But, you know, did mom have any?
Where's her husband? You know?
Well, maybe mom got divorced when Wanda was
Okay.
12. Who knows? But you know, did
Okay.
mom have anything for interest, dividends, stocks, bonds, anything like that?
On Social
Yeah.
Security.
We have to ask that question. We still have questions that we need to ask.
Right.
But based on the information that we have, this is something that we can do, and it's totally within the rules.
Do we ever give the customer like a comparison? Okay, this will be returned if you do this, or that.
Yes,
or
if they ask for it.
is that,
Yes.
something
Yes.
that we do
I mean, and the
sometimes?
example, the great example is right here in the office. Linda and Joe, okay, Linda versus Joe and her husband, and the grandson, Robert.
Mm-hmm.
They all live at the same place. You know, Linda's here. She has earned income. She's on Social Security. No, it's not enough to disqualify her. So they have to run it both ways. Does it work for Joe to claim Robert, or does it work better for Linda to claim Robert? And they run 2 different returns
Well, that's because Joe's husband is
on disability.
Right.
So all they have is her substitute pay.
We do it. We do the comparison a lot for couples who are divorcing. They're separate. They're still married, and they want to know: is it more advantageous for me to file married filing joint with my soon-to-be ex, or will I get a better outcome if I do head of household? So we run the married filing joint return, and then we turn around and run a head of household return and let the client decide.
So you have to run the whole program from beginning to end, and then
We do it in
begin.
We do it in
We do it
practice.
in practice, but I will tell you, practice is not
They don't update practice
It's
mode
not-
with the most updated information.
Right, yeah, it's not giving the correct
So
numbers.
early in the season, practice mode will give you a better, more true result than later in the season.
Yeah.
Oh,
Because, like I said, they don't update practice mode. They should.
Yeah, they should. They really should, because they use that practice mode a lot less. Especially for the.
I mean, you
ones
can
that
you
run
can always
in.
kind of take a look at everything and do what we call a down and dirty. See what his gross income is, what her gross income is, add it together, subtract out the married filing joint deductions. I mean, you just a down and dirty. This is about what you'd be looking at here. This is about what you'd be looking at there.
And you can take your numbers back to the earned income credit table and see what's
Yeah.
it's coming back with.
We also have a couple that they have no kids, but they insisted that they wanted to file married filing separate. And when we ran it, they actually benefited from married filing separate. So it does happen.
Yeah.
It can. It can. All right. So rule number 11: if I don't have a qualifying child, I must be 25 or older, but 65 or younger. If I don't have a kid. If I have a kid, I can throw out the age. So, going back to the previous example on Wanda's 24. If she doesn't claim her son, she doesn't qualify for earned income credit at all. Next year, she's 25, she actually might.
Yep.
So another wild card to throw into the whole loop. If you're married filing jointly, you've met this age requirement if only one of you is in this range. If you're married and he's 67 and she's 55, you qualify.
Is DCF still giving out letters for kids in group homes that age out?
Right, they should.
Do they still give out letters for kids in group homes that age out?
They have to carry some kind of a, so they don't get picked up.
Well, there's a specific
Yeah,
reason
for
why
sure.
I'm asking. Because technically, an 18-year-old kid that was in a group home, foster care, whatever, for 4 or 5 years, ages out, doesn't have any other family, no parents, no nothing like that. With the right documentation, at 18, 19 years old, they can qualify for earned income credit. But they have to have documentation about
Basically
it. And I
saying-
know DCF used to give kids that when they aged out like that didn't have any other family, documentation stating that they've aged out of the system and they are
I see where you're going
responsible
with this
for
because
themselves.
Because you're kind of, like you said, you're trying to prove that you kind of have an emancipated person. Because
Yes.
what jumps out at you when you look at that bottom age? What jumps out about that number to you? 20.
Can't be anybody's fault.
Right.
That's exactly right. You can't be a qualifying child of anybody else at 25.
Unless
So you're on the right path here. That's the reason why 25 exists.
Mm-hmm.
That's the reason why Matt brings this up. The child technically is emancipated because there's nobody left to claim for them, so they actually would qualify for this credit because nobody else is eligible to take it.
But they have to be able to prove it.
Yeah, they have to be able to prove that nobody else can claim that.
And I've done 2 returns in my 8 years where I've been able to get this credit for an 18 or a 19-year-old, but they've brought in a letter from DCF stating that they have emancipated out or aged out of the foster care, group home, whatever system, and are responsible for themselves. And I attach it to that, and there's a bunch of other stuff that you have to file with the return
Yeah.
that goes
Well-
with it, but
But you bring up an excellent point because Brenda had a client, although she would qualify easily just because she had a child at that time, but she was 16 and living on her own. You know which one I'm talking about.
Yeah, but I thought she was younger than that.
Well, she might have been 15.
I was thinking she was more like 14 or 13.
No, I don't think she was quite that young.
Well, okay, I'm thinking when it happened.
When it happened, but when she actually got done
Started
going through the
filing
court
16,
and being
yes.
emancipated,
16.
she was 16 by the time she got done with that.
Yep.
Yeah.
And she had to prove the child was hers and had to do it for years.
Yes.
Because they were so close in age.
Yeah.
Oh, yeah.
But
yeah.
fortunately, she kept going back to see Brenda.
And Brenda knew exactly what to do.
Brenda didn't have to ask any questions.
Nope.
The IRS is satisfied with, hey, look, it's from Liberty Tax again, and that P10 is the same as last year.
And they've already proved it, so nothing's changed. So we're happy. Go ahead. That's why we say consistency.
Consistency goes a long way.
And now
I-
she goes to Shane now.
Yeah,
So-
Brenda can't come to the office anymore, and so she comes over to see me.
That-
Because I've been here just as long.
Yeah.
I knew the story. I knew this. I was there the day that Brenda did that for her first return.
Yeah. When it comes to consistency is everything. That's why we usually get into very long conversations with clients that we're filing head of household, and because she's listed as the primary taxpayer, she gets married, they join together. Now, when she comes in to see us, our system's automatically going to make her the primary taxpayer, and new hubby throws a fit because he wants to be the primary taxpayer. We have to try to get them to understand that it doesn't matter who's listed as the primary as far as the IRS is concerned.
Yeah, they don't care.
But their last names have to match.
No, they don't.
No, they
They
don't.
don't.
Not even, no,
No.
to the person. We had a girl that
Oh.
had
Oh, yeah.
Yeah.
get
It's
her
Social
name
Security.
changed. They figured out.
Yeah, yeah.
But-
Well, she didn't want to use her her previous last name
Right.
because
The
she
dude
didn't
with
want
the
to
butt.
be associated with him anymore. But she didn't have her Social Security card updated yet, so she had to file under her
Married.
Yeah,
previously
Previous
married
name.
name because that's what's on Social Security.
yeah, I get that point.
And if somebody comes in and demands a specific tax preparer, don't take it personal.
Yeah, yeah.
They're just comfortable.
They
Yeah.
they've been with us, that person for a long time, and they don't want nobody else.
Actually, the person I was referring to, it was kind of, when Brenda
That's
stopped
exactly
doing it, it
the
was
way she
almost
is.
pulling teeth.
He's got one that's mean.
Yeah,
He
well, that's
really
different.
mean.
That's different. But the person I'm referring to, she's not comfortable
The one that
because,
I
I mean, it's an
last
embarrassing
year.
situation.
No, the one.
She doesn't want to have to explain it again.
Yep. And I think it's kind of hard with me personally, because she went to school with my
Oh,
kids.
it's aviation
Yeah.
credit.
So,
Yeah, he
Yeah.
yeah.
Oh, Mr. Hall.
All right.
No
You
names.
or your spouse in filing jointly cannot be a dependent on somebody else's return. Well, if I'm a dependent on somebody else's return, or could be a dependent on somebody else's return, then I shouldn't qualify for credits for myself. They should qualify for credits, potentially.
Crystal.
Again, that's consistent with rules that we've talked about before. Dan 17 signals parents provide over half his total support. Dan's earned income is 2875 because he meets all the dependency tests. His parents can claim him as a dependent on their tax return, even if they do not. Dan cannot claim the earned income credit on his tax return. We couldn't anyway at 17. We don't have enough. He doesn't qualify based on age.
Doesn't qualify based on age, and he's not going to qualify because I'm almost sure mom and dad are going to claim him as a dependent.
Yeah.
And they're gonna come back and knock on our front door and say, hey,
can we amend?
yes.
Cannot be a qualifying child of another person. This is true even if they don't claim you. They're strict about EIC. I mean,
Yes.
we're talking about thousands of dollars. This one credit alone could be worth $10,000. Well, okay, maybe not. $8,000.
$8,000 for this year, but when you come, the two biggest refundable tax credits we apply for our clients are the additional child tax credits and the earned income credits. And between those two credits, you're looking at a refund of anywhere between $8,000 and $12,000 just from those credits.
That's with 3 kids.
Yes, that's with 3 kids.
Yeah.
But I mean,
That's maximizing everything out. But you can see that, we're talking about
And we have those here.
yes,
legitimately. And we also have those people in here who are not legitimately trying to claim it. We've got to try and weed them out. Usually they shoot themselves in the foot.
yeah.
You and your spouse and family jointly must have lived in the United States for more than a half a year. If this isn't true, then you don't qualify. So my Dubai guy, even though he makes way too much money, would never qualify. Because him and his kids all live in Abu Dhabi. My Canadians will never qualify because they all live in British Columbia. Your earned income must be less than the limits. Well, obviously. And it must be more than 0, obviously. If your earned income credit was denied or reduced for any reason other than, oops, I can't add 2 plus 2, complete Form 8862, information to claim an earned income credit after disallowance must be attached to your next return, which EIC is claimed. And people will come in, you'll ask them, have you ever had EIC denied to you before? And they'll say no. And you'll file the return and it'll reject because they should have
Yes.
said yes. And so then we have to file we have to add an 8862
For each child.
for each child. They got to come back and re-sign everything.
Yep.
And that's just if they determine that you didn't really mean to.
Don't need to re-sign for an 8862.
Okay, if they have a financial product, they do because I just changed the invoice.
Okay. Right. Okay. So yeah. I was gonna say because I had one last year that rejected for an 8862, and I talked to them on the phone, added it in, reshipped it, and I mean because they gave me all of the documents to claim the
Yeah.
credits, so I just put everything in and ran it, and it went right through just fine. But
Yeah.
I think they paid for it up front.
Right. That's here. If the IRS determined that it was just due to intentional disregard of rules, then you can't claim EIC for 2 years. If the IRS says is that you're trying to commit out-and-out fraud, you can't claim EIC for 10. And you might be in jail.
And here's the catch. When they say that you can't claim earned income credit for 2 or 10 years, they're not talking about claiming the credit for that specific child. They're talking about claiming the credit, period. So if you get nailed for a 10-year bit, you get divorced from the woman that you were with, turn around and get with another woman, have 2 more kids, you guys cannot claim, that couple cannot claim earned income credit for those new children until that 10-year period is elapsed. It's
Now,
not
can they
child
file an
specific.
injured spouse?
No,
No.
no,
Not for that.
no. If she wants to be able to claim his kids, they need to not be married. If they are married, they have to get divorced. She files head of household and claim the kids. Then she can claim earned income credit. But as long as his name and social is on a return, they will not be eligible for earned income credit, period.
No, it doesn't happen a lot, but this is...
No.
It can be. The IRS generally just says, okay, well, it was kind of a you should have known better type mistake, but we're not going to throw you completely under the bus.
And a lot of times if they had it done somewhere, they put more of the blame for the improper credit on the preparation service.
Right.
How do you tell the difference between intentional disregard of the
I
EIC
don't.
rules and fraud?
I don't. The IRS does.
Yes.
Oh.
All we
It
can do.
sounds like it's the
So
same
if-
thing.
If you have a 2-year disqualification and you take it to a different preparer and don't tell them that and try to file it.
It'll
they'll
reject
Okay.
because the
Automatically. As soon as
it's
you
at the
Social Security
IRS
number.
level, not at the office level.
Yes. No,
So-
you're on the right path. The IRS has flagged that number.
Yeah.
And as soon as it hits, if it doesn't have the appropriate forms attached,
It'll
it
reject.
rejects. And there's a number of cases where this is a true statement. Another one is now, thank God, 1099 or 1095A if you're on the Affordable Care Act. If the 8860 or whatever the number is, if that form's not attached to the return, it rejects.
Yeah.
And then we got to call up the client and say, "Hey, did you have health insurance at the marketplace
No.
last year?" And they're going to say no.
Did you
And
have
then
it
you're
the
going
year
to say,
before?
"Well, did you have it the year before?" And yes. Did you cancel it outright? No. Well, then you had health insurance for the first 3 months. Call and get your
Our
1095A.
biggest answer back to that question is, all I did was open it and look at it.
Yeah,
I didn't
that's what they
sign
tell us.
anything. I didn't pay for anything. You still put your name in and went to see what it was gonna be, and
Yeah.
it generated.
Yep.
The other big one is identity protection, personal identification numbers, IP pins. Those are actually halfway legitimate because a lot of times what will happen is a client will file their return, and for whatever reason they'll get a letter from the IRS for that year saying, we need you to prove who you are. So they do. So the IRS is happy and they send them their refund. The next year when they come in and we file it, it rejects back for no identity protection PIN number. They didn't know they needed one.
Or they threw the letter away thinking it was just
Yeah.
mail, mass
Yeah.
mail.
Yeah.
Yeah, they didn't. You know, they just didn't realize what they actually had in front of their hands. Fortunately, you can go onto the IRS website and get it replaced quickly.
Well, then a lot of times they, for that one, they don't know
It's not so quick.
about it could take weeks.
Well, it's quicker than nothing.
If to go on the IRS website and get it immediately, you have to have an ID.me account.
And that's
for
what
one.
I-
If you go on and you don't have the ID.me account, you can get your IP pin reissued. It takes about 21 days.
Yeah.
Only longer now that.
The government shut down.
Expired.
Yeah, no, man, that ain't coming out right now at all.
But if you want to spend 4 or 5 hours on average getting
On
an
hold.
ID.me account with the IRS, then yes, you can log in through your ID.me, go right on the site, and get your number immediately.
Guess what you need to do to get your need to renew your P10.
You have to have an ID.me account.
Oh, we do?
Yes, you have to have an ID.me account now to renew your P10 because that's how you will sign in to the IRS to get your P10.
That's annoying as hell.
That's different than
It's
Social
gotta
Security,
be.
isn't it?
It is, but if you have an ID.me account, you can sign into SSA.gov with your ID.me account. When you go to
transferable.
when you
I don't know
go
which one I have.
when you go to SSA.gov,
Right. I have it set up, but I'm just not sure which, if I have the login.gov or if I have
the ID.me, yeah, with the ID.me, IRS or Social Security, you can use that to log into either one of those.
All right. Taxpayers eligible for EIC have these things in common. They have earned income. They have a valid Social Security number. They are not married filing separately. Cannot be a non-resident alien. Cannot be a qualifying child of another person. Whether or not they actually got claimed is irrelevant. Just because they could doesn't means that they can't.
My 16-year-old daughter living at home with her own child cannot claim earned income credit if I claim her as a dependent, or could claim her as a dependent.
Right. Cannot file 2555, which is that foreign earned income. Investment income must be less than 11,600, or whatever the magic number is for the tax year that you're doing.
Yeah. I don't know what it'll be this year. Probably the same.
Yeah, that number hasn't changed very much throughout the years. Some of your most common errors: claiming a child who is not a qualifying child. That's our biggest problem. This is where we ask the nosy questions. Especially if we're talking about nieces and nephews. Why are you claiming them? Married taxpayers who file incorrectly a single head of household. Again, some person told them that they should file as head of household. They'll get more money. That's not inherently true. Now, I can understand where the argument's coming from, because filing by myself, I'm below the limit, but if I include my husband, we made too much money collectively, so now all of a sudden we don't qualify.
Yeah. We get that a lot.
We get that a lot. But like I said, they also trip themselves up a lot.
Oh, hang on, my husband's calling.
Uh-huh.
Excuse
Phone
Yeah,
starts
they
ringing.
were
It says,
that
"Oh, it's my
last
husband."
me, you're who?
The who?
We had a girl come in do hers, but her boyfriend would not allow her to finish her return. No, he was present to find out how she was going to get a return. I said, it's not
We
his
were like,
business.
nope.
Nope, it's none of
Yeah.
your business.
She, out the door she went, we let her go.
Yep.
Wasn't that one line?
Yes.
That's what I thought.
Your investment income threshold for this year, 11,950.
One of the very first.
Another error is under or over reporting income. This is basically guilty on the self-employment people. They know what number. The EIC tables are published next month. November, December, somewhere along those lines. Earned income credit tables are going to go out. They're going to run the numbers. Okay, let's see here. So my maximum income to get my most amount of refund is $12,000. And magically they're going to come in here with self-employment income of $12,000.
Bring you receipts from their hairdo business through middle of July. And then they won't like the number. And then they'll come back and hand you a piece of paper with more income written in crayon and go, here's the rest of my year. Do you accept it? I'm going to tell you right now, no, not if you brought me handwritten receipts for every transaction you made from January through middle of July. I want the handwritten receipts for every transaction from the middle of July through December.
They'll come in and say, well, I made $12,000 in my business this year. Great. Where's your expenses? I don't have any expenses. A business with no expense.
Sergio, do you remember the
Sounds
hair braiding
legit.
lady at Broadway? That's exactly what they're talking about.
Yes, I know. I recognize.
Oh, you recognize it. We all recognize it.
Yes. That
Well,
was
he
an-
recognized it because he got hammered too.
it was an
She
adventure.
was a little handsy, this kid.
Oh,
Oh, her.
Yeah.
Oh, okay.
sorry about that.
That's okay. She won't be coming back to us. We shut her down
I know.
2 years ago.
I think I know which one who you're actually talking about.
Yes.
She emptied it from our water coolers and.
Yes,
tried
that
to change
kid
it.
was-
Yeah,
a
I know
tornado.
which one you're talking about.
She did.
Yeah, because I did her the year before.
Yeah.
And then she found out I was over at Rock Road, and she came over to Rock Road. And I was like, okay. So I opened the return
Well, it's because we refused it.
and started looking over everything. And luckily, the other store went, wait a minute, what's the return doing open? And called, and they're like, this is what's going on. And I'm like, oh, okay.
Yeah,
So,
we will call each other if there's something to give each other a heads up.
Yes.
So,
if one office has a problem client come in and they storm out, they leave, whatever, we will call and I'll call over here, Shane will call me and say, hey, this person was just in, this is the problem we're having. And that's why we like to keep what clients bring in. We will actually
Yeah.
scan it in right there before they leave, because we've started the return. That way, if they come over here to Shane, Shane can
And
pull it in
omit
and bring it up and go, oh, okay, yeah, I see I've already got all of these documents here, 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 and here. What are we looking at? And 9 times out of 10, once that happens, they're right back out the door.
Or they're out in the car trying to fix those documents or make them up.
Yep.
That's where your crayon comes in.
Yeah.
I usually tell clients if they leave, I usually give them a heads up not to come over to my Pawnee and Broadway office because that's my office too.
Yeah.
And that just eliminates the headache for Shane.
Yeah, and so, and there
Yeah,
are
I do
people,
the same
there
thing.
are people, there are organizations out there
Yep.
that shop it around
They learn from one and go to another.
until they find a place that'll make it work.
Well, it's my wall of fame.
Yeah.
How many times do we get fraudulent W-2s for the same company from 2 different people?
Two
Not
different
very often.
females.
No, one was male, one was female.
Yeah, but then the female, there was another female that tried to come in with that too.
Oh yeah.
Over here, I think.
It happened, yeah, here.
Oh, did you guys get one for?
It was the same group, but
It was
a
the same
different-
group.
It was the same group, because remember you called.
Yeah.
You called the
There was
company
2
and you
girls
were
and 1
like,
guy.
Yeah, because I
and then I had a guy call and wanted to do it via remote.
right.
It was
That's
the
Yeah,
same thing.
that was
Same
that's
guy.
the 2 that are on our wall. Is they did everything remote, and they sent in all of the documentation they figured they needed. Well, when we're looking at the numbers, we can already tell up front these aren't correct W-2s.
Right.
There was, yeah, it was over withheld.
And I called Shane and I'm like, am I violating anything if I call the companies? No. So I call the companies and I simply ask for an employment verification. I don't say anything else. I say, hey, this is Matt with Liberty Tax in Wichita, Kansas. I have a W-2 here. I need to verify employment, please. And I give them their name and their social. And unfortunately, the company that they were doing it with last year was a payroll company.
Yep. Yep.
So not only did they look in their database, they looked in the database of every company they do payroll for. And these people came back as 0. Well, they sent me, they uploaded copies of their IDs, lease agreements, everything, and I sent I PDF'd it and sent it all over to them.
Looked into it, the address for the girl was
No,
a vacant lot.
No, that was them.
Oh, was it the same one?
Yeah.
No, it was Matt and Sheen looked it up, and
Oh,
it
I
was a
thought you
vacant
looked
lot.
it up
Yeah.
and it was a
No,
vacant
it
lot.
wasn't me.
Yeah,
One was a vacant lot,
And one
another one
across the
was,
street from the penitentiary.
yeah,
well, another one was an actual house out near Lake Afton.
yeah. It was out in the middle.
And what-
It was out in the middle of a field.
Yeah.
I remember that.
And the company that they were choosing to use, although this isn't a big alarm, but it was alarming enough to begin with, was a company out of Salina.
Then we had one that came in, the the form, but it was printed in red.
Yeah.
If it's
I've got
on
2 of
red,
those.
not black, you
Yeah.
don't take it.
And then one of them had cents on it. They didn't round it up. It had pennies on it.
Yeah, you run.
Oh.
Well, they will.
Small letters.
W-2s will have.
Yeah, but the one they made out had dot 72 cents or something, so we knew that was
Yeah,
It
there was
all
a
off your
small
base
letters.
too. Yeah, and the
Yeah.
printing and everything.
Well, the first one that we got, the font was all wrong because it was all
Yeah.
lowercase.
Right.
One was red.
Yeah,
It was red. Yeah, she sent it in to me. It was red, and then with a little bit of further investigation, the name on there is the same name as the business cards for Family Auto that they dropped off. Remember, sitting on our front table?
Yeah.
It was that same name.
One that we had that we pulled up, I could go in and change it. Remember?
Yeah, it was edible. It was
was
editable.
Oh, wow.
Really?
Yeah,
Mhm.
I
Is it-
remember that one, and that was a big alarm for us. Wait a minute.
Yeah. Well, because the first one I got with the incorrect font and everything was out of a nursing home in Lynchburg.
Or if they hold more Kansas than they did for federal.
Yeah, that's a big alarm.
Yeah.
But
So
or it gets flagged because they withheld it like 70%.
More
Yeah.
what they made.
well, yeah, 'cause the one she made like $25,000 and had $5,800 withheld for federal withholdings. Like, really? You had over 20% of your total income withheld for taxes. and then didn't have enough on the state side withheld.
Right. And the FICA was wrong.
Yeah.
All of those actually caused a flag within the program.
Well, some of them were caught at the front door.
Yeah,
Yeah.
the two that I've got up on mine, I didn't even process because I looked at it and I looked at how much she made and how much she had withheld, and I'm like, over 20%. So I started running numbers.
Yeah.
And when the numbers didn't come out, I called for employment verification.
All right, so to claim the credit, if you're doing it via paper, you have to complete the Earned Income Credit Worksheet. Use Worksheet B if you're filing Schedule C. You get lost in the alphabet here. Otherwise, use Worksheet A. The worksheet says to look up the credit on the Earned Income Credit table in the 1040 instructions. The credit is based on your earned income or your adjusted gross income, whichever's worse.
Yes.
This is the one place that I can think of, the only place where you're required to take the worst of the two results.
Yep. This is where your other income comes into play to eliminate you from earned income credit.
Right. If your AGI is below the threshold, use your earned income to look EIC amount in the EIC table. If your AGI is above the threshold, you need to look up the EIC for both your earned income and your AGI, and then take the smaller amount. Of course, the computer will do all of this for you, so
Yes.
big deal. Line 27 and 1040 is where this shows up. If you have children that you use and to qualify for EIC, you must fill out Schedule EIC. Again, computer handles that for you. It's not an issue.
Yeah.
Walter is single, no one qualifying child. His earned income is $17,270. AGI is $24,355. Using the table, he finds out his credit based on earned income is $4,213. His credit based on his adjusted gross income is $3,949. By rule, he must take the lower $3,949.
And our system will figure all that out.
Yeah.
It'll just tell you this is what the credit is.
We just go over this in case they did it on paper and didn't do it right, stuck with the bigger number, and they say, "What?
Yeah.
Why you got a different number than I do?" Well, this is the reason why.
We also get a lot of people that'll start their return on TurboTax,
Yeah.
and then before they finish it, they'll bring it into us. They'll have us do it just to see what we say they should be getting back for refunds.
And
Yeah.
we do that for free.
And then they go home and finish it on TurboTax.
Yeah.
That's if we do it in practice mode, like what Shannon was saying, it doesn't come back sometimes.
As in our numbers.
Yeah.
Yeah.
But you
Match
have to
with
know
that.
that in advance.
Yeah.
Most of the time, you got it done, and it's like, oh, okay, well,
Most of
that
the-
matches what I have on TurboTax.
Those
Well, I have
are
two
the,
choices right now, don't I?
That's what we try to
That's
do,
one of
do it
mine
as a drop off too.
I can try and convert them by saying, okay, you know, what's TurboTax charging for you? I'm already done here. I'll charge the same price.
Yeah.
I'll do
We
that.
try and keep them in the seat.
Yeah.
As
Yeah.
you like to say.
And that's why they came here to double check their work.
Or they have
Because we do
something
free
they
consultations, and
forgot
so
to
they
put
know
in
that
there and they have to do it
they
immediately.
know that we'll confirm their work for free. They're just smart enough, kind of, to come and say, you know, hey, they won't say that I started this on TurboTax. I just want to see what happened. You won't find out until you give them the result and say, you know, they'll say, well, I did it on TurboTax. I got an extra $300. Well, then I guess you go home and file it on TurboTax because I know what my number is and I know I'm confident in it. I don't know what you did.
Right. Without seeing it, we can't tell.
Yeah. Why is
Yeah.
my number different? Well, I really can't tell you. I have no idea.
Yeah, because usually when we give them our number, they'll go, well, that's not what I got on TurboTax.
Well, for all we know,
And
they could
sometimes-
have transposed your number.
Yeah, and sometimes it is. Oh, hey, that matches what I got on TurboTax. Okay, well, I've got one shot at trying to complete my sale here.
Yep.
I've already done the work. I'm at the same spot you are if you went home.
Does TurboTax today ask for the 1095 A?
No,
That's why we,
Well, you have to fill it out.
Yeah, and it's a different form than what we're used to.
Yeah.
It's way different.
The reason most people do TurboTax is
they lie
Be-
about their dependents.
is because of what we require
They
with
don't wanna
with the
bring-
return.
They don't
You
wanna
know,
bring-
they don't want to provide. You know, they come in and they weren't a client last year, so this year they have to give us a birth certificate, social security number, and proof that the children lived with them. And they don't want to do that. They can go home, do it on TurboTax. They don't have to provide any of it. They just plug everything in and go.
Yeah, that's the problem on the TurboTax as far as fighting the battle as a paid tax preparer. The IRS looks at us as their first line of defense.
That's any outside tax.
Yes, whether it's H&R Block, Joe's Tax Service, or Liberty Tax,
Yeah.
the IRS looks as the professionals as the first line of defense.
Yep.
We actually have a special form that we fill out as a paid tax preparer.
Due diligence forms.
Due diligence form saying that we ask questions, we ask nosy questions. We saw the documentation.
The biggest misnomer that people have when they do TurboTax, Tax Act, Tax Slayer, is that when they file their return, if something goes wrong, they've got somebody to help them, and they don't. When you file your return through TurboTax or an online software like that, you're filing as self-prepared. It's on you.
Yeah.
If there's a mistake on your return, unless you've paid for that service through that online platform, you got to come see me to get it figured out. And usually at that point, when I've got a client in the chair that's wanting to walk because they say TurboTax will file it for $100, and I won't do it for $100, I let them, and I let them know, that's fine. If you want to go and file it through TurboTax, that's fine. But understand this: if there's a mistake and you have to bring it back to me to fix it, not only are you out the $100 to TurboTax because they're going to get their money, but I'm going to charge you full price here plus $150 for the amendment. So it's going to cost you probably $600 or $700 for me to fix your mistake because I have to recreate your return and then amend it. Or you can pay this now, take it out of your refund because you've got plenty,
I'm not worried about it.
and have the comfort of knowing that if there's a mistake, we'll take care of it.
Right.
I don't hardly ever charge for amendments. I should, but I don't hardly ever charge for an amendment. If we've prepared the return and there was something wrong,
The only time
something
I'll
that
charge
happened
for
with
an
it,
amendment is if they should have added something to begin something with,
Yeah.
and I'm gonna have to go back and add another kid.
Or
A form.
they were so fast on filing that, you know, the W-2 showed up 2 weeks later.
Yeah, yeah.
I would
Oh!
say, I didn't make but $100, $200 on this, do I really have to put that on the tax return? I didn't do anything.
Absolutely, yes.
Yes.
All
IRS
right.
already knows.
So this is what you're looking at when you're filing the tax return is, in this case, it was with the child and married filing jointly. If you're doing it by paper, I don't worry about this because
The system doesn't.
the system does it all.
yeah.
Even if you're filing by paper, the system still does it all, and then prints out the appropriate forms.
Yep.
But I do like showing this page because here we're looking at what your earned income was. Here we're looking at what your adjusted gross income was, and we're comparing whether or not what's your worst number for earned income credit. This is what a Schedule EIC looks like when you have children on your return that are qualifying you for EIC.
Yeah.
There's nothing on here except their name, their social security number, and their birth year.
And the fact that you state that they qualify.
Yeah. So a little bit of talk, just a little bit of talk about due diligence. Like I said, there's an entire chapter of this, and I really don't want to scare the bejesus out of you. But we have to exercise due diligence in the preparation of tax returns. If it smells like yesterday's fish, we've got to try and put air freshener on it, or another perfectly acceptable outcome at this point
Bye.
Bye.
See ya.
Please do.
Get out.
We're not filing fraudulent returns.
Yeah, please do. I mean, if there's something wrong, somebody wants you to do something on their return that you know you can't, you've explained it to them, and they're insistent upon it, I have
Yeah,
no
that's-
problems backing up any of the preparers in our office that say, I can't do it, you'll have to take it somewhere else.
I've had people come in and ask me, can you do this? I'm like, absolutely not.
Yes.
You know, it's like I was telling, when I got that phone call at the office on Monday, wanting me to verbally know he's trying to defraud by saying he had more dependents than he actually did.
Right.
No, thank you.
Don't come in.
You are a blood related to me through my grandson, then no thanks.
Right.
And I will let my other office know, because you're not going over there.
No.
I'm not defrauding the IRS, I'm not paying, because he wants to
Be stupid.
rob the state.
Like I said, unfortunately, the IRS treats the paid tax preparer as their first line of defense because we should know better.
And because of it, a lot of our clients believe we work for the IRS. We do not.
We
Yeah.
work for them.
We work for our clients. We are the buffer between our clients and the IRS. My job's not to do a tax return that benefits the IRS. My job is to do a tax return to the best of our ability for our client and stay within the IRS parameters. That way, my client doesn't have to worry about letters from the IRS saying you shouldn't have done this, you shouldn't have done that, da, 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 da. We want this much money back with penalties and interest.
I'm not paying them, and I'm not paying that $625.
35.
Oh, it went up?
$635 for
Did it
each.
go up?
Yeah.
Six
It
$635
used to be
for
$550, and that's per
Incident.
incident.
Per
You can
question,
have-
per
Hello?
person, per incident.
You can have multiple 635 charges on the same return.
Yep. Is that to like, is it up to like $45,000?
There's no cap.
I thought it was.
Because not only do they look at the different returns and the
Yeah.
different questions on the one return,
They can
if-
pull up to however many they
they
want.
can start looking at all the other returns that you did. And not only are you being charged $635, you as the preparer, then the owner of the place will also get charged $635 because he shouldn't allow this to happen.
That's why we do double checks.
It's exactly why every return gets double checked. Nobody's pulling anything. Mistakes are honest mistakes. If it's an honest mistake, the IRS will recognize it's an honest mistake. You're fine.
And it happens.
There are clients out there who are knowingly defrauding, but they're so good at lying that
And
you'll
then we
never
buy
catch
it.
it.
Yeah.
That's also not your problem. Washington's full of people that
We're
are good
not
at
the-
lying.
Like what Brenda used to say, we're not the police department or whatever she said, we're
Yeah.
just agents for doing taxes.
There'll be some returns that get through. There always will be. There are people that know what they're doing. If they actually spent that much time running a business, they'd be very successful. But the whole idea is oh, I don't want to work. I want the government to send me free money. I don't want to scare you. That's why I hate talking about due diligence, especially early on. We give you the tools to spot this stuff. That's why we talk about it as we go. We know what a fraudulent W-2 looks like. We know some of the stories that we're going to hear that just don't make sense, but we've heard them. And I'm telling you them. Matt's telling you. Suzanne's telling you. Shannon's telling you. This is what we've heard. I'm sharing it with you. It doesn't do me any good to keep the information to myself.
And if they're not willing to bring you the forms,
Then we're not willing to do the return.
and you can pretty much guarantee they're trying to pull something out.
Right. If they don't want to go home and get the form, no. I'm sorry it's an inconvenience, but we're not going any farther until I have it.
And I even use the line, once you run long, get it. I'll work on this while you're gone.
That way when you get back, we'll be basically done.
But with as many years that we have in here combined of tax preparation, it's over 50, 70, 80 years. Well, getting close, because Brenda's not here, but,
Brenda's still involved.
yeah. hers is close to 20, you're almost 20.
I am 20.
Shannon's almost 20.
No, I'm
13, I'm 8, and Matt's 7. Sergio's what, 4?
4. No.
And this is Amy's
Shut
2nd.
up. Anyway, so, and like I said, everybody gets double checked.
Even the people that, like,
Even
you were
Shane.
saying, Shane gets
Me.
double checked.
everybody.
I want to be double checked.
Me too.
I hate it when returns go out that don't get double checked, like in the summertime,
Yeah.
because there's nobody here to double check.
Yep.
I said, hey, if they don't want to provide the information, if they don't want to answer the questions, walking out that door with your stuff, fine.
Toodles.
Don't come back.
And a lot of people think that, I'm gonna be honest, they think I'm a hard ass. But I had a guy last year that tried to bring me his social security form. It was not the right form. He argued with me, I showed him on the computer what I needed. He was mentally not on it. And basically told me to wipe my ass with his form and walked out. And Joe was like, I cannot believe you just kept your cool. Now, if it would have been Joe Blow, that was perfectly fine, we would have had words. But this dude was not mentally all there. So,
That's the same with my client. Amy had to get up. She got the phone in her hand. She gets up, walks around. She's standing behind me at my desk, and this lady all but took the monitor off my desk. Just the same as
She
Shannon's
freaked
has
me
been
out, that was
cleared
like my
off, and-
second day there.
But it came down to be that I'm autistic, honey. The day the entire United States was born, every one of us were autistic.
I got mad. And then you go, put me on
but
speaker.
don't be afraid to stand up for yourself.
Heck no.
You don't have to take the abuse.
Don't be afraid to turn back to one of the more senior preparers and say, I need some assistance.
I had one last year that was, at the end of the tax return, we go through every single form. Well, this person wanted, like, me to explain every single form that she signed.
Yeah.
You know what? I'm not as good as that, as,
That's okay. We'll help you.
as she is, as Matt is. And I even bypassed her and I said, hey, Matt, can you come over here? So he went through each form with that person, and I'll tell you what, she was still trying to pull one over on him, and I'm like, yeah. I'm glad I yelled for him.
Like I said, as a paid tax preparer, we have a special form that we have to fill out if there is a refundable credit on the return. If there's no refundable credits on the return, or only non-refundable credits, we don't have to fill out this form. But 8867 is paid preparer's due diligence checklist. This is why I hate TurboTax. TurboTax is not required to ask. They could actually include it in their program. They could program it in.
I've never looked at it, so I don't know how they're good.
I haven't either, but I know that they can program it in. We know what the questions are. So do they.
Yeah,
This
because
form
they
has
got
the
form.
questions. And we have to ask the questions to get the answers. We have to type in the response. And the IRS
Word
wants
for word.
the IRS wants you to type in the response exactly as they said it.
I love Brenda when she used to do that.
Oh yeah, if they say a cuss word, type it in.
That's exactly correct.
Because if we have one that has a child on it, but mom's got him and dad's not around, you gotta ask, where's dad? I don't fucking know.
Okay, you write
That's
that
what
down.
we put on there, mom does not fucking know. We do.
The IRS wants that.
It's
That proves that you weren't just making up answers. It proves actually that you asked the question. The other thing the IRS does not want in answer to the question is yes,
one word answers.
no. Hey, I need a little bit more. Yes, because. No, because. Have you seen the child's father recently? No. Why? Well, he's in jail.
Incarcerated.
Okay, great.
Best place for him to be for that instance.
So we want context.
I need more than just yes or no. Like I said, the IRS has questions for you to ask. And some of them actually are yes or no, but some places we need to go into more detail. This section right here actually says, list documents provided by the taxpayer that you relied on to make this return. Now, some people kind of get a little short here and just, I use the residency document and that's it. Now, I, on the other hand, just being me, I used a W-2. I used a 1099. I had an SSA 1099. I'm typing all of it in because I used all of them to make the return.
That's what we do.
Now, some people are just a little bit shorter. They're only looking from the point of view is what documents did I use to support my claims on
The trial.
the child.
Government forms are, and school forms are best.
Yes. We love Social Security statements for the dependent. That's my most favorite form of them all.
And a new child under the school age, if they bring in their social security card and they got it folded all up, open it. Because then 9 times out of 10, they have proof of residency and their social security card right there.
Still attached. They have to be attached though.
Yeah.
To comply with knowledge requirement for the tax preparers, this is what they're talking about. Apply a common sense standard to what the client is saying. Does it make sense? Does it smell like yesterday's fish? Hey, I work 8 days a week. Does that make sense?
No.
It's a good song by the Beatles, but you can't.
The question is, how do you pull that one off?
Evaluate whether the information appears to be complete or if there's something missing. One of Brenda's favorite questions always is how much did you pay in rent?
Yep.
And then they just unthinkingly rattle off the number that they paid in rent, and then you realize they paid more in rent than is in all of the W-2s that you have in front of you. How did you pay for everything else? How did you pay for the rest of your rent because you didn't make it here? Determine whether the information is consistent. Recognize contradictory statements or statements that are inconsistent with what you know to be true. Well, I mean, it speaks for themselves, but we've mentioned this one is that inconsistent, they say, well, I'm not married, and then their phone goes off, and this is my husband, I gotta take this. Well, that's not consistent.
Or they have a wedding ring on.
Yeah, that's not consistent.
I mean, as ladies, we don't always take them off, but men, but it's weird if they're both sitting in front of you, they're not even married, but you're both wearing one. Why?
Conduct a thorough, in-depth interview with every client every year, because every year is a different picture. Things change. Things stay the same. It could be the same answers. That's not wrong. Just make sure you ask the question. Ask questions when the information appears to be incomplete, incorrect, or inconsistent. Like I said, somebody comes in with a business and all they show you is income. That's inconsistent with a business. Where's the expense? Now, if there was such a thing out there as a business with no expense, everybody would be doing it. Ask enough questions to ensure that the return is correct and complete. I've had people walk out because they felt I asked too many questions. See ya.
That's usually a red flag, though.
Yeah, that's usually a red flag. And sometimes that's my purpose.
Yep.
I know this is wrong.
You feel it. You just have that.
Just everything about this is screaming wrong. But I don't want to come out and say, you're full of shit, get the hell out of here. So what am I going to do? I'm going to bury you in questions until you get so frustrated that you want to leave. And most of the time, sometimes they'll storm out. Sometimes they'll storm out cussing a blue streak. We've had customers sitting in here while that happened at a different desk, and they're like, "Go to that guy," because they knew. It was so obvious that even they figured it out.
I had a guy yell at me from the front door one day, and I had two other clients waiting, and they stood up to have this fella knock it off, and they walked him out the door.
Help the taxpayer understand the documentation he or she should have to support the claims. That's why I mentioned that loop of birth certificates, because the IRS could ask for it. Do you understand that you need to try and start tracking this stuff down now, because your IRS letter basically only gives you 90 days. It's going to take you more than 90 days to get all that information. So you start working on it now in case they ask for it. Ensure that the taxpayer is not underreported nor even over-reporting income by asking necessary questions to that the income is correct as reported. Now, if your only income is showing up on W-2s, that's not the guy I'm concerned about. It's the self-employed people.
Especially when their number is right at that sweet spot for earned income credit.
Mm-hmm.
With no expenses.
Well, even with some expenses. Because, okay, they came in here a couple of years and they figured it out. Oh, I'll have to answer more questions if I don't have expenses. So I'll make some up and throw it on there. But I'll pad my income enough to make up for the expenses so that when I get down to it, I'm still back at my number. Woo! We recognize that. How do you come at this? Okay, here's your expenses. Where's your receipts? I don't care if they're on your credit card. That's a receipt.
We had a return last year for a lady that was a hair braider. When we sent all her documents in as the Schedule C and stuff, the person who did her return at the IRS rejected it because he didn't know what a box was in hair braiding. So they rejected it only because of that. But I don't know if that young lady ever came back or not.
She did
Because
not.
she did not.
She did not. She went somewhere else and bought it.
Because she had to only declare what a box was, which means this is a box up here, and then like across here is one, and all the back. And and they called it that. We couldn't get her to come back, but she did have a brand new baby.
She listed on all of her receipts
Last
how
name
much
wasn't
how much
Edwards, was it?
how much she charged. No,
Could be.
she listed how much she charged and what service was provided. But because
They
it was a
wanted more
business,
information.
they wanted a menu of services list, and she didn't have that. But if you looked at all of her receipts,
And all
the
this.
cuts that she made of all of that kind were charged the same amount. Shouldn't have mattered.
No.
But Tyrone,
Yeah.
with compliance, decided that it wasn't enough to prove that she was running a business.
Only because he didn't know what a hair braider did. Well, because it's ethnic, partly.
She only got flagged for compliance because it was her first year with us. And she didn't have an EIN. That's my firm belief.
When it comes to EIC with a child or tax credits with a child, some of the more common places for concern is claiming child other than a legal son or daughter. I'm not saying it can't happen. You can claim your niece or your nephew. It's not the problem. It's just we have to ask more questions. Why are you claiming your niece or your nephew?
I have a client that has a nephew because his parents were killed in a flood.
Yeah. And it could be that simple. Mom and dad are dead. Okay. Moving on. The age of the taxpayer compared to the age of the child is inconsistent. Well, that's particularly one of the clients that we kind of talked about a little bit earlier. She was very young when she had her daughter, and so it can cause some problems. Now, she's been doing it for all the year. The daughter's, I think, graduates from high school this year.
Oh, wow.
I think. Maybe she's only a junior. I don't know. But she's getting up there. So, I mean, it's no longer a question. but at the time, starting out, it was actually a concern. Very young taxpayers with qualifying children who could potentially be the qualifying children themselves. You know, what's your living situation? If you find out that you're living at mom's house, at this income level, at that age, maybe mom should be the one claiming both of you.
If you're 16 with a brand new baby making $8,000 a year working part-time, living at home with mom and dad,
Your mom and dad's dependent.
they're still eligible to be on mom and dad's return.
Then would they get the daughter and the newborn?
Yes.
And the daughter would file her own tax return if she had withheld, and
Yes.
she would claim on her tax return that she's being claimed as a dependent.
Single taxpayers with young children and no child care expenses. And I don't care. They're going to come up here. I'm going to ask the question, okay, well, who's watching the children while you're away at work? And they're going to say, well, I go to school. Okay, then what happens for the days that there's no school and or summer vacation?
What about their grandma?
That's fine. Tell me that.
Oh,
I just need to know to explain that, so I don't, so I, you know, so I'm not missing something, because they say, well, they stay with their dad. Well, that becomes a little bit, you know, I have more questions again. You know, well, tell me about dad's relationship that's going on here, and maybe they're living together and they just want to tell me. You know, I gotta be on the lookout for it. But if they're, you know, they're staying at grandma's, that's fine. I like that answer. That works for me.
Anybody but a potential spouse or ex.
Yeah. Tell me that you're in Latchkey. Show me that you're getting free daycare from the church. I don't care. Just fill in the gap.
DCF gives me a subsidy to send my child to the Boys and Girls Club.
There. I just need to plug in that gap. And the other thing is that you can tell me, hey, I take the summer off. Okay. I can believe it. I'm not trying to say that you're a liar. Is it feasible to say that, well, you know, hey, I taste that she's not at school, I just take it off? Okay.
If I'm a paraprofessional, am I working when there's no school?
For the most part, no.
Possibly.
Possibly yes, but for the most part, no.
You're either doing latchkey or an after school or before school, which is latchkey.
So I mean, I'm not looking to trip you up. I just need to fill in the gap.
Yep.
You know, it's like looking at income. I'm looking at this year's W-2. What I also need to actually be looking at, though, is what you got as a refund last year. Because if you got a $12,000 W-2 in front of me, and I'm thinking, well, how did you live on $12,000? Well, my first question should be to myself is to look at last year's refund. If you got $10,000 refund, well, now that $12,000 just became $22,000, and a lot more feasible.
Now, those refunds that they get the previous year, they don't pay taxes.
No, but it goes a long way for me asking myself the question, how did you support everybody on this amount of that I'm seeing on a W-2?
I mean, if you think about it, if you got a $12,000 refund in March, and you know that your rent is $800 a month, what's to stop you from turning around and paying $9,600 when you get your $12,000 refund and have your rent covered for the entire year?
That's what I did.
That's what Brenda does too. She would take her income from this time of year and prepay her rent, prepay her electric bill.
I have a client that does that. Well, we did.
You know, so if you're making $12,000 on a W-2, but you got a $12,000 refund last year, and somebody says, well, at $12,000, how can you afford to pay $800 a month rent? Well, I got a $12,000 refund last year in March, and I paid for a year.
And it's a legitimate. It's legitimate.
The refund's never going to show as income because it's
Yeah.
not.
My son
But it
gets
does show
United
how you
Health.
can afford to.
And that's information I'm putting on due diligence. I looked it up. I looked at last year's return if you were a return client.
Yeah.
If you're a new client, one of the things that we ask is you bring in last year's return so I can take a look at it real quick.
And we want to make sure we don't miss anything this year that
Right.
you claimed last year.
My son gets United Health, and he gets a bonus card.
Yeah, yeah.
And that bonus card pays our water bill and pays our electric bill every month. I mean, and then I've got LEAP for the gas bill, and so it's all I have is phone and rent.
Right.
That's
So
it.
when you're doing your tax return and it asks you what non-taxable support that you have for that
Right.
year, you can put all that stuff down.
Mm-hmm.
Doesn't disqualify you from anything, but
Right.
it does show how you're able to support your family on this amount of income.
Other than here, it's just my son's disability, you know.
Right.
I regret that I forgot to print off the questions, but let's just go over them anyway. Michael and Lisa married and they have two qualifying children, 8 and 15. They filed joint tax return. Michael has earned wages of 22. Lisa has earned wages of 4. Additionally, Lisa received unemployment at 25. No other income. What's their earned income for the earned income credit? Well, you do a lot of math. 26. Yeah,
It was
because it's asking what's their earned income for the credit, not their adjusted gross income. So remember to answer the question.
but the unemployment compensation.
Earned income! That's what the question's asking.
Do it this way, earned income, because anything you do by, with your hands is earned.
Well, but
income.
Sergio knows the difference between the two. He's just trying to add everything together. But
Unemployment
he's
is
answering the wrong question.
unemployment earned income. Not
No.
total income, but is it earned income?
No.
So we can eliminate the $2,500 of unemployment income. How much income is left?
It doesn't mean I can ignore it overall. It just means that for this question, to answer it, that's not required. And the reason why I bring this up to you is that to work here, you have to pass the Liberty exam. Everybody has passed an exam of basic tax knowledge. It's open book, open note, open internet. But make sure you answer the question,
Yes.
not what you think it should be. Now, what's their adjusted gross income? This is the question you want to answer. C, 28.5. What's the primary difference between non-refundable and refundable tax credits? When in doubt, go with the most wordy answer.
Usually.
The unrefundable credits can reduce the tax owed to zero, but not provide for refunds. When you use it all, you've used it all. Whatever's left over, you don't get. Refundable tax credits can result in a refund if they exceed the tax they owe. So if I pay off all my taxes and I still have money left over, I get it. That's my refund. What's required to qualify for the earned income credit? Having earned income. There's a reason why it's called the earned income credit. Gotta have some. What happens if the tax preparer fails to meet the due diligence requirements when claiming credits like EIT for a client? Well, you're damn sure not going to receive a bonus.
Or get promoted.
Yeah. When calculating earned income credit, what's an essential factor to consider?
Huh?
Hey.
Hey.
Filing status and number of qualifying children, because remember, and married filing separately, I might not qualify. There's a minor exception for, and it's hard to work with, but if you're in a domestic violence situation, there is loophole.
Yeah, but at that point, I would have put it in for that.
Yeah, but if she just left at the last
Yeah,
part of
yeah.
the year,
Okay.
there is a problem, but there's a loophole.
Yeah, if she left in October because he was beating her and the kids and was in a shelter, we
Get a statement from
we
the
can work
shelter.
around it.
Yeah, well, I would have the statement from the shelter. I might even have a police report.
Yeah.
Why is due diligence particularly important for tax preparers when dealing with refundable credits like EIC? Because these credits are worth a lot of money. We've given you scenarios that are completely true. The client has doubled their income for the year just by filing a tax return. The client has given themselves enough money to support their family for the entire year between the little amount that they worked and the tax return that they're getting. Which of the following statements is true about non-refundable tax credits? They can only reduce the tax owed to zero, and that's as far as it goes. How does the IRS define due diligence for tax preparers regarding earned income credit? We must ask for necessary documentation to verify the accuracy of the return information. I'm sorry, if you're going to say that the kid lived with you, you need to be able to prove it. I will confess to being a lot more lenient for married couples when it comes to this, claiming children. When it's their children together. Who else is going to make a claim against it? I'm not really threatened by this.
The ex-husband's new wife. I hate
Different.
that girl.
Yeah, but we'd have different names. But when I'm looking at Smith, and I have a bunch of kids named Smith, I have no doubt of who's the parents.
Or you have an uncommon name, Zonker.
Yeah.
Zonker. Yep, I'm gonna say.
Yeah.
So I'm a lot more forgiving on documentation when it comes to this scenario because I don't really have a lot of question of what's going on.
And keep in mind, if they've been coming to us for 2 or 3 years, the first year that they came to us, we did obtain documentation proving that the children are theirs, the social security numbers belong to those children, and that they live at the house.
We have a client that
So when
has
they come back the
11
next
kids.
year, all I'm basically looking for is the updated information about the residency.
Yep.
I want the new school registration form.
Yep.
I
Bring me
want
the new
this
PDA.
year's SSA 1099 for the child.
Yeah, bring me the 1095C that shows the kids are on your insurance
Yeah.
for this year.
Anything that puts them at your place. I just want a new one for this year.
Bring me the awards letter from DCF for the food stamps and the Medicaid.
Yeah, Medicaid especially. That's usually something that gets overlooked by, when you're bringing it up. Hey, I need something that shows the kid lives with you at your place. Hey, that awards letter had just arrived, most likely, from CanCare. But they're overlooking it. Although, it's exactly what I'm looking for.
What I need.
I asked for that before I asked for, are you getting assistance like food stamps, cash assistance?
Yeah. Because most of the time, most of our clients, their children are on CanCare.
And sometimes, depending on who it's through, those parents actually have a 1095B with each of the children's name on it.
Yep.
Yeah.
Yep.
Which of the following is an example of a refundable tax credit? Which is not a fair question because we haven't covered any of these.
Well, we've covered one.
Yeah, one, earned income credit. But we haven't talked about the lifetime learning credit, the foreign tax credit, or the adoption credit. Not really a fair question, is it? All right, we'll see you next week.
Monday.
Monday.
Unless you want to come back tomorrow night and rehash the course.
Yeah. If you want to hear the same lecture again over, you can come back tomorrow night.
Or you can go on